He don't trade, he seduces the market.
Champagne in one hand, options in the other. Got your mama trading crypto while he flirts with her mother. Oh, silk collar wide, he glide. He took your girl and your gains on the same damn ride. Ha! Money do a backflip when he blinks. Whisper stock tips between his drinks. Sip that bitch. He ain't a trader, baby. He's a financial disease. Spreading gains through your wallet like a funky striptease. Crime and son, Kohrs. Ooh, that man's illegal in 12 states. Crime and son, Kohrs. He trade like he's sinning, baby. Crime and son, Kohrs. Pulling profit like pennies, smooth and fast. Crime and son, Kohrs. Velvet crying in a bubble bath, soft ass. Velvet Kohrs talk sweet, but he's soft like foam. Tryna front with a flute while I own the trombone. Blow something, Velvet. He walk in, folks yawn. I strut in, alarms going off till dawn. Velvet's rhymes more like thrift store flair. I'm first class funk with the Wall Street stare. Check the wrist, baby. He out here begging for clicks and applause. I'm making more green than Santa Claus. Oh my big stocks, big belt, big motherfucking attitude. Making more noise than me and your girl on your honeymoon. Velvet out here looking like expired lube. While Crimson pump it raw. No YouTube. Ladies, I'm looking for a girl who can ride the dip and make it drip. I don't just buy low, I go real deep. Pump, 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 pump it up. Ooh. Pump, 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 pump it up. Yeah, baby. Pump, 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 pump it up. Ooh. Pump, 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 pump it up. Yeah, baby. Crimson. He don't trade, he seduces them digits. Velvet still trying to lease his motherfucking widgets. He the chop daddy, the bear killer. Velvet's just noise. Crimson's the thriller.
Oh, brother, oh, brother, oh, brother. Oh, brother. Oh, brother, oh, brother, oh, brother. It's another Friday, folks. It's another episode of the Matt Kohrs Show where you're Matt Kohrs and I'm the show. And obviously a special round of applause for Crimson Kohrs stopping by the show early this morning, serenading us with his beautiful little ditties there. Folks, it's not just a Friday. It ain't a normal end of the week. It is a payday Friday. We're giving away some cold, hard cash today. So I hope you guys have been working on your marble racing because it's going to be the fastest marble in all the land that ends up making this money today. Making the money today, you got to be fast and you got to be lucky. Not only do you need to win the preliminary competition to be in the final race, but then in the final race, as you guys may know, no rules. It's prison rules, as in all that matters is you winning. So I hope you guys have been prepping for that, hitting the gym, dieting, like getting your mentality right. We will be doing that, but also in the middle of really marble racing, we might check out the stock market a little bit today. There's some news. It's not that exciting. The market's honestly been kind of quiet over the past couple weeks, past couple months. So like, it's probably just going to be another like low vol, low range, nothing kind of going on type of a day. So yeah, we might peak the market. We might peak the economy. We might peak some of the breaking news. But other than that, I think we're really, really here just to see who's going to end up winning the marble race. So it's a beautiful Friday. I hope you guys have had a great, awesome week. Hopefully incredibly profitable. And I hope you're ready for a good Friday, and I hope you're ready for an even more exciting weekend. I don't know what you guys have been up to in your life, but I hope it is better than you could have ever possibly anticipated. So where I'm going to kind of break everything down for you of some of the news this morning, what's going on, what's not going on. I'm sure we're going to have a rant or two at some point today. The market's going to go dingity ding ding ding. We're going to watch it. Ideally, we're going to see some good setups, make a shitload of money. We're going to do some marble racing, and then we're going to call it a day. So I hope you guys are good with that. I hope everyone's good. I hope you guys have your Piper cup, and I hope everything's just ripping. I hope all of your wildest dreams are coming true, because maybe they will be in the market today. What is this one? Jamie Dimon says he expects the S&P 500 earnings estimates to fall as companies pull guidance. Well, maybe. All right. Big headline as of right now, stock futures rise as traders assess the latest tariff-related developments. This morning, we did have China clapping back, and the market really doesn't know what to make of it. Right now, the SPY is slightly above its closing value from yesterday. Same thing with the Qs. We have the dollar diving, and we have gold ripping. Gold has, in fact, hit a new all-time high, and this muted reaction in the equities market, clear reaction in the fixed income, currency, and really commodities market is because of China's latest move. At 5 in the morning, it was announced China raises tariffs on the U.S. to 125%, and they really went out of their way to ensure that if we somehow retaliate even more on them, that it becomes to the point that it's, I think the word that they used is laughable, because at that point then allegedly American-made goods have truly no value in China. So they really wanted to hammer that point home. The U.S. and China are going to economic war, and everyone will suffer. Well, probably, but the way that China has really stepped into, whether it was Trump's intentional trap or if it just kind of was there, only I guess he knows what's going on in his mind. The world it's pretty much China versus the world. I mean, right now we're already seeing various other large players basically saying, hey, we're Team US, we're going to strike a deal with you guys. And it was all because of the recent development of, hey, 90-day pause on everyone except for China because China's retaliating. And now they're in this place where they can't not retaliate, because then President Xi Jinping and obviously the people of his country might look at him as being weak. And really, he's been putting on for years and years and years this persona of like, I'm the guy saving China, I'm the guy protecting China, very much of like just like I'm the dude type of a vibe. So it would be a weird I guess psychology shift. He's like, you know what, I'm sorry, I'm going to negotiate, I'm going to do what Trump says. So they're in quite the hubris position. But anyway, China raises tariffs on U.S. goods to 125% in retaliation. Beijing will no longer match any further hikes in U.S. tariffs. It vows to counterattack if U.S. infringes on interest. I find this interesting because you see how we, in the political arena, there's so much ego. There's so much hubris. And you kind of see it of like, we know we have to hit back, but we also want this to be a short-lived thing because no one's going to sustain this in the long run. And you see it right here. Beijing will no longer match any further hikes. So basically, it's like when you were texting your ex and you're like, hey, I just want you to know you could go fuck yourself and I'm never talking to you again. But you wanted that last word and you're like, I'm not responding to anything. So that's what's going on right here. Is they're like, we have to show a bit of strength. And like, we want to do the last move, but we're also going to let you know that it's our last move. Like, it's a bad breakup. That's what's going on. These are long distance lovers and they're going to different colleges, and the high school sweetheart situation, it's not going to really make it. And even though it worked for years and years and years, there's a lot of ego. There's a lot of heartbreak in here, and the power's in the last person to speak, I suppose. And right there, like, we're going to retaliate, but just so you know, we're not going to do this anymore because we kind of really secretly don't want this to happen and we'd love to get back together. But like, you hurt our feelings, we hurt your feelings. So that's the real situation we're at. Anyway, here's what Bloomberg has to say on it.
We just got news a few minutes ago that China is retaliating again against the U.S. retaliation, so it's hard to tell who's retaliating in what way at this point.
Rosalind?
China's now saying they're at 125%.
Haven't heard that name in a while.
And Donald Trump saying that U.S. tariffs are on China at 145%. So we're in the realm of just endless tit for tat, it seems, at this point. But the message very much from China is we are going to escalate if you're going to escalate. Whether that creates the room that Donald Trump is talking about for conversation at some point, it probably still does. because Xi Jinping and Donald Trump are both pragmatic enough to know that they probably should talk to each other if there is that opportunity. But how do you get agreement and understandings to talk in a climate like this? But certainly China sending the message again that they're not going to start to slow down in the face of Donald Trump's escalations on trade.
Yeah, and Christian, I guess this is, what everyone was waiting for. Does China kind of stand still and try to negotiate, or do they ratchet it up? Is this just going to escalate and escalate, or will there be common minds at some point?
Yeah, I think the uncomfortable thing for markets right now is this escalate to de-escalate idea. I mean, you've seen that to some extent with the reciprocal tariffs.
Who's this guy?
The 90-day pause. Like, you had an escalate.
Who's this Patrick Bateman, like, closeted serial killer vibe going on right here? This guy, he's done some stuff to get his position as Goldman Sachs asset allocation research head. There's nothing going on behind those eyes. That is, you can just see it's a very dark abyss, just reflecting back your own image to you when you look into those. This guy's seen some shit. This guy's seen some shit, and he's done some shit. This is the guy, the sneaky guy, that if you were in a room and you're like, if shit hits the fan, who am I most concerned about? Like, who has that dog in him? It's this guy. This is that guy. This is that guy that you just, man, he might look like that middle-aged dad showing up to rec soccer in his suit, just got out of a meeting a little bit late. Wife is pissed. He's there in the first quarter, maybe halftime. He forgot the oranges. But when shit hits the fan, this is the guy who goes, dude, you could just see it. And you could see it by the lack of what you're seeing. Crazy.
Escalation, and eventually there was a pivot. And the market has the same to some extent with the US and China. Where does it get worse enough?
The
market never likes things it can extrapolate, and it never likes things that cause uncertainty. So the more you escalate, the more you cause uncertainty. So I think in summary, as of now, it seems like negotiations, escalations, and the market will price this increased uncertainty until you have to pivot.
Yeah.
We need the pivot, the blitzkrieg pivot.
Or is this about the economy? Yesterday, we also know that China really took quite a lot of time to try and figure out whether they could support the economy to a point where they felt comfortable, with an escalation.
Well, Xi Jinping probably feels fairly comfortable. I mean, they've done quite a lot of work in China to diversify their economy away from the US. You can see that.
I love the matching of like a Wisconsin
and
mom
the kinds of goods that they're shipping to
vibe,
the US
at least,
what they're importing
and then
from the US.
A
so
Goldman
they
Sachs
possibly
German
weather
dude.
it a bit better in terms of the direct impact on consumers.
Well, you hear
the US,
now.
It's much more direct hit on consumers. Xi Jinping
we need to
is
help
also
the
doing a lot
consumers.
to try and boost consumption in
We
China.
need that
Expecting more than
pivot.
that, possibly even today. More announcements
What a
on
pairing.
stimulus
I love
from
it.
China designed
You
to
don't get
juice
this. You don't
their
get
own
this in
economy.
reality
But
TV.
equally, they do have their own bases to think about here. Xi Jinping needs to look strong for his domestic base. Donald Trump needs to look strong that he's standing up to his own voters. So when you've got
We
two
are here from the
leaders who
government
both need
and
to
we are
play to
here
their
to
bases,
help.
both need to look strong. How do you thread the needle through that to get to the point that you can talk to each other without looking like you blinked first? And so that's the difficulty. How do you navigate through this? They probably do want to talk to each other, but they can't be seen to be
Dude,
backing
they're long
down.
lost lovers.
What's
They
the
are.
likelihood of the two leaders
They're
actually
Romeo
meeting?
and Juliet.
Well, very
They
likely
are,
they'll meet in person.
unfortunately,
in the near term. Interestingly, we saw
Hatfield
news
and
today,
McCoy's.
That Xi Jinping is inviting EU leaders to come to Beijing again, and that's a fairly regular thing. But the last
All right,
visit
I'm going
was
to give you the TLDR, and maybe I could use a metaphor that Rosalind here. Sometimes when tensions are boiling over between the Hatfields and McCoys, the only thing you can do is slow roast a nice pork leg all day, and you just slap it on the table, invite the sides over, put a case of Kohrs, and let them work out their differences. But at the end of the day, they're the Hatfields and McCoys. It's going to be a tit for tat thing, and we've just always had these issues. And I would say she's just trying to get everyone around the table, and that's reasonable. They love each other. Dare I say it? Maybe not exactly like Romeo and Juliet, but there's a lot of similarities there. I don't know who would be Romeo. I don't know who'd be Juliet, but it's just right now we're seeing a lot of ego. We're seeing a lot of hubris. We're seeing it kind of, fuck man, it reminds me of my relationship. It's just, I just don't want to say sorry. Never want to say sorry. In my relationship, I like to use the Donald Trump tactic of never apologize, never relent, just keep going and going and going until the other side admits defeat. Unfortunately, when you have two people like that, Trump, who literally pioneered this methodology, and then President Xi Jinping, who is literally the same, they're there. Like, I picture him every day, kind of like that Wolverine meme where they're just like, he's looking at the picture. Dude, I think these guys want to chat. I think they want to hug. I think they want to kiss. I think they want to make up. I think they want to make it work. But they can't because neither side wants to be the first one to drop the bravado, you know? But one of these days they might. Maybe cooler heads will prevail. Or, like the other guy said, maybe we'll just have the government blitzkrieg. Totally possible. Totally possible. But in other news, there are many other countries who are trying to strike deals. India wants a U.S. trade deal with an urgency not seen before. So India wants in, Israel wants in, Argentina wants in, Japan wants in, South Korea wants in, India making a big move right now. We also have right here, U.S. begins negotiations with Vietnam for new trade deals. So that's actually going to help a lot of clothing-based brands. So we're seeing this progress. Like literally every other country is either neutral or trending in a positive manner in terms of this particular narrative, except for China. And when that particular shoe drops, and I don't know if it will, and if it does, I don't know when, but when it does, like when the tensions finally simmer down with China, I mean, what's going to stop this market from just rippity-skippity doodah, you know? So that's my prediction. But on the other side, the longer this goes on, you don't know what kind of unmitigated pain it might actually prompt. Like right now, we're seeing a lot of stress in the bond market. We're seeing yields going up. We're seeing bonds coming down. We're seeing the dollar dropping. We're seeing gold spiking. There's some crazy, crazy stuff right now. Dollar sinks and gold soars in spiraling trade war. This is the impact of the continuation of the fight between U.S. and China. Gold clocking an all-time high. Safe haven asset. People are saying, dude, we don't know what's going on. It's very, very rare that we have bonds diving and equities diving. That's what's happening. That's a rarity. It should not be going generally that way. When equities are under pain, you usually see this flight to safety and people buy up bonds and they just wait. But we're in this unique circumstance because of the trade war backdrop and because of the inflation backdrop and because of monetary policy backdrop that we're in a very unique, rare pairing of both equities and bonds taking a hit. And one of two things are happening. We're seeing people try to get some safety in gold, i.e. why there's such an appetite. Gold's hitting an all-time high, trying to get out of somewhat of the financial system here. And then we also see people just parking their cash on the side and just saying, dude, I got to wait this out to see what in the world's going on. But yes, gold is ripping new all-time high while the dollar's absolutely plummeting. And right now we do see yields going up a little bit. I saw that early this morning. Here, let me show you the 10-year yield. We have yields popping, which means bonds down. So a very, very strange circumstance of yields up, bonds down. Simultaneously, we have the dollar going down and we have gold going up. Lots of strange mismatches right here. This pairing of the general trends we have going on, it's going to be studied for quite a while because certain things that are correlated normally should not be correlated. Certain things that have an inverse correlation now have a direct correlation. So there's just lots of confusion across the board. Just wanted to share that, bringing it to some of the announcements this morning, which you could argue a little bit of a positive side. Yesterday, we got the CPI report, the consumer price index, inflation coming in lower than expected. Today, we got the PPI, the producer price index, and it's actually coming in ice cold. They estimated 3.3%, came in at 2.7%. Taking out food and energy, looking at the core reading year over year, they expected 3.6, came in at 3.3. So for 2 days in a row, we're seeing inflation come down. That's a good sign. But in terms of the interpretation of the market, there's somewhat of a fair argument of if inflation's coming down, Trump might not feel that much pressure to like bring down the tension of the bring down the tensions of the trade war. Obviously, if things were still breaking, he would be a little bit more under pressure. But in a weird way, you could argue the fact that inflation is trending the right way, it gives him a bit more breathing room to still be a little bit more of that bull in a china cabinet. On the other side, you could just say, well, hang on, man, the fact that inflation's coming down, we actually might be getting these rate cuts, and that's a good thing because that's exactly what Trump wants. Like, everyone's looking to get these rate cuts. But then from there, the whole thing gets a little bit more complicated, because if we do get rate cuts, what's the impact going to be on the dollar? And then we're getting like a rebirth of this renewed fear that the yen carry trade is going to blow up. Right here, you can see that the USD JPY pairing is diving, and that's obviously happening because the dollar is horrifically diving. So it feels like we're in a weird situation where imagine like we're at like just one block with all the complexities, and that's all the pros, all the cons. It feels like when we ever go to the next stone, it's just like a whole new world of what the fuck is happening here right now. Like I said, right now, there's a lot of correlations that are being formed that we haven't seen really. There's ones that are being broken that people didn't think would break. And every single time that we're getting updates like this, you're seeing a lot of whiplash reaction. Some people are arguing that's amazing. And then you look at a completely different market. They're like, well, this might be good for commodities. Then they're like, this is horrible for fixed income. What's it mean for currency? And like, we're starting to really get a true understanding of, or a true appreciation of, the complicated web of how this is all connected and where is it connected and who's feeling the pressure, who's not feeling the pressure. And at the end of the day, just who knows? Maybe the best strategy is to fire from the hip and hope that you're right on the 50-50 shot. This is absolutely nuts. With respect to next week, like I said, CPI yesterday, PPI today, both inflation reports coming in less than expected. Wednesday of next week, April 16th, we are getting retail sales, and Powell is speaking in the afternoon. So pay attention to that. Set a special alert for Wednesday. On the 17th, excuse me. On the 17th, we're getting our normal just Thursday stuff. I do want to remind you that Thursday of next week is the final trading day of the week. The market's going to be closed on Friday. So those are things looking that you should be paying attention to. Bringing it back to today, congrats. We are now at the start of earnings season. JP Morgan, BlackRock, Wells Fargo, Morgan Stanley, all reporting this morning, major financial players giving us kind of a look at their books and kind of a look into how they think things are currently shaping up. JP Morgan Chase tops quarterly expectations as Jamie Dimon, the CEO, says U.S. economy faces considerable turbulence. Yeah. No shit, brother. Wells Fargo shares climb on higher earnings. CEO calls for timely trade resolution. So the initial news we're getting related to the financial sector, XLF is the sub-financial sector of the S&P 500, XLF. So feel free to check that out. Looking pretty good this morning, but we're really getting underway over the next coming week. So on Monday, we're hearing from Goldman Sachs. On Tuesday, Bank of America, United, and Citi. Wednesday, ASML, giving us an idea of what's going on in the world of semiconductors. Thursday, Netflix and TSMC. And then obviously for the final 2 weeks of April, that's where it gets really exciting. And that's where we get the big headers such as Microsoft, Apple, Meta, PayPal. It's going to be a crazy conclusion to the trading month for sure. Apple's coming out really at the start of May 1st right there. So feel free to screenshot this or just go to @eWhispers on Twitter. It's always a great resource. Obviously, every single week I give you guys the cheat sheet of just what's going on. This is a free newsletter, comes to your email inbox every single Sunday. Sign up for it. It's 100% free. Always has been free. Always will be free. Macros@locals.com. I break down the previous week and what's going on in the upcoming week. I give you a little cheat sheet of the earnings. I give you a little cheat sheet of all the major macroeconomic events. I give you the seasonality for each individual trading day, which actually brings me to today, where it's slightly bullish. Over the past 27 years, the bulls have won this day 52% of the time. And as you could see from the equity curve that you would have if you took this trade at market open, sold at market close, a bullish position on the S&P 500 futures market. For a bit there, it was bearish the first decade, and then we went a little bit flat, and more so recently, we're seeing some nice gains historically in recent history on this particular day. So right now, when it's so news-driven, I'll even admit that seasonality is by no means the end-all, be-all, but I do just want to share that I give you this seasonality for each individual day, if that's part of your morning prep process of just knowing what is or isn't going on. So just wanted to share that over the past 27 years, the profit factor 1.8. Obviously, the bias is bullish, and there's a slight edge to the bulls as we normally see in the market. All right, bringing it back to what we have going on in the market, SPX. Many of you saw the update video yesterday, and I appreciate you guys checking those out. It seems like a lot of you guys aren't enjoying it. So if you guys didn't know, every single day after the market closes around 7 p.m. Eastern, we post a market update video. It's a quick 8 to 12 minute video of all the major things going on in the market that day and what to look forward to in the upcoming day. We do it from Sunday to Thursday. Sunday's the prep for the upcoming week, and then Monday, Tuesday, Wednesday, Thursday is every one of like just what happened that individual day and what to look forward to in the next day. And I share some of my own thoughts and opinions, my position updates, all that good jazz. But once again, wherever you're watching this right now, we do those update videos every single day on the same channel. So wherever you're watching me right now, we do the live show in the morning and then we do the update videos in the evenings. But anyway, if you saw the update video yesterday, you would have a better appreciation for how insane these 2 days were. Between Wednesday and Thursday, these 2 days will go down in infamy. This is the most insane setup that you could have ever possibly imagined. And on Wednesday, we got the announcement around 1 p.m. in the afternoon that Trump's going to do the 90-day pause and bring everyone down to 10%, everyone but China, and we ripped. We had a historic gain. It was the second biggest percentage gain in the NASDAQ. It was the 9th biggest percentage gain in the S&P 500. But then if you look at the points gain, as in like the real money that was gained, it was record breaking on the S&P 500, the NASDAQ, and also the Dow. So record breaking gain. The very next day, yesterday, was the worst sell-off, at least at Intraday, the Intraday extreme, that we've seen since March of 2020. The worst intraday sell-off. The very next day, we went from the best bullish day to a historically bad day. And then from there, we were this close to getting a circuit breaker halt in the NASDAQ. In fact, we actually punctured that 7% number that you have to hit for it to actually trigger the circuit breaker where you get the 15-minute pause. But the reason we didn't is because of a very nuanced rule of the second you hit it, if you start to bounce out, it starts a 2-minute timer. And if you stay above it for those 2 minutes, it actually removes that circuit breaker. And then the next circuit breaker is just the 13%. Now, obviously, if you break it and you keep falling, well, yeah, then it's just going to actually be the circuit breaker. So the reason we didn't get a circuit breaker in the NASDAQ yesterday is because like of a super specialty rare case. But folks, we literally hit the value that would cause the circuit breaker to the downside because of how much the market sold off. And if you look at the SPY, we weren't that far away. We dropped at like close to 6.5%. Had we gone 40 more points in the SPX, we would have had an actual circuit breaker there as well. Picture all of that. Record-breaking gain. Next day, record-breaking loss where we almost circuit breaker halt. And what if I were to tell you that that was an inside day? I don't know if this is 100% true, but I would be willing to bet a lot of money that we have never had a situation where we're talking about a limit down circuit breaker halt in the entire market. Like that in itself is a rare event. But imagine if I were to tell you that and also let you know, oh, it's an inside day, as in we didn't break the high or the low of the previous day. Generally, when you're talking about circuit breaker halts, it's like a dagger down red day, and you're taking out all these lows, you're breaking all these levels, and it's legitimate capitulation. But this time around, it was an inside day, and just nothing was happening. And yet, everything was happening. Folks, what just happened? Really, yesterday, the day before, and I would say this entire week, you live through history. You're currently living through one of the most chaotic times that's going to be studied for so many reasons. It's going to be studied for just the insanity of the stats, facts, and figures that I'm hitting you with the market right now. It's going to be studied for the correlations that are being created and simultaneously being broken between really the bond market and the equity market. It's going to be studied from the political level of the most insane trade war to ever go down. The only thing more ridiculous in trade is when, I don't know, I'm negotiating with my cat to stop scratching me, and I'll give her her toy, but then she freaks out and wants the toy and then wants catnip, and then she wants to play, and then she scratches me again. That's the only other negotiations I know that are like this absolutely intense. And yet we're all here. We're all living through it. Who is spamming? Conservative crying in chat. Better ban me. Well, obviously you're going to get banned. Are you stupid? This is what's so interesting about the internet is I'm always going to be a big supporter of free speech. Always. Like, hey, if it's on your mind, I think you should have the right to say it, but also you might have to then like deal with the consequences. So someone like that, obviously, you just want to get banned, and now congrats, you're banned. So play stupid games, win stupid prizes. But the interesting thing about free speech is we then just get to know like how retarded people are. So right there, one of the beauty things of free speech is right there. He can say and act in any way that he wants. And then it's just like a very interesting highlight. It's a showcase. It's a giant light on just how absolutely retarded some people are. And there we go. Like they like to raise their hand and they're like, hey, world, I don't know if you didn't know this about me, but I have like brain issues. Like I loved as a toddler to smash my head off the ground, and now I have to deal with a single digit IQ, and yet you're still in society with the rest of us. It's just crazy. It's crazy that people use their rights, their God-given rights, to just show off how incredibly stupid they are. But hey, I guess that's just one man's opinion. Anyway, I hope you now have a little bit of a better appreciation for this insanity, which then brings us to the key levels of the day, and I'll be talking about those as soon as the market opens. But let me get going here because that market is about to get rocking. Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. All right, I am going to do my best to be a, good trader today. We're going to see. I'm going to attempt to cosplay as a good trader, and we're going to see what I could pull out. But the market opened. We were open slightly below yesterday's close, and we're already making a run for yesterday's close. I just arbitrarily have up MicroStrategy and Tesla. If you guys see something that's moving that's more extreme, please let me know. I'm more than happy to swap out some of these charts and just throw up whatever you guys want to look at the most. But I did want to break down the daily chart a little bit more. I would consider it to be bullish if we start to break this inside bar. Yesterday was an inside bar on the daily chart, as in we were within the high and the low of the previous day. I like to look at which direction we break of the inside bar, as in yesterday's high or low, and that's exactly what I have marked here. Among other things, the green, the red, and the white are yesterday's high, low, and close. The yellow/golden lines are key open interest levels. The white box is the transition zone, where I would say no one's really in control from a zero DT perspective. Above it, I would say the bulls are in control. Below it, I would say that the bears are in control. And then obviously, I would have some extreme targets of just really what we saw. Like if we were able to break above the high, I would be then targeting 5,455. If we break below the low, I would then be targeting 5,000 flat. So these blue lines would be my kind of reach level targets in the event that we break the high or the low of yesterday. And in between all of that, I'll be paying attention to this transition zone, and then I'll also be paying attention to just how the market reacts to these key open interest levels. But like I said, transition zone below between 5,300, 5,250. I'm going to see how this zone really shakes out. If we can, are we going to be chopping around in it? Are we going to hold below it and bears have control today? Are we going to be on top of it? Are the bulls going to have control? That's what I'm going to be kind of waiting just to see how things shake out, but just wanted to quickly give you a rundown. I should let you know, obviously we have a big weekly expiration today. The option chain is put dominated. Granted, from a gamma perspective, it's pretty much neutral just because of where we are. There's a lot of puts that are deep down the chain that really just don't have much of a gamma impact. So if you're looking exclusively at the open interest, well, yeah, you would say it's dominated by the puts. But in terms of the delta and gamma impact, a lot of these puts have a strike price that is literally hundreds of points below where we are right now, and they're sold puts. So there's just not much of a gamma and a delta influence. So in terms of the influence, and when I say the influence of the impact that it's going to have on the market makers hedging out their book throughout the day, a lot of the puts just literally have no influence. So if you look at what's going on plus or minus 200 points from here, it's actually pretty much neutral. So yes, the zero DTE chain and really the entire chain is put dominated. But then you have to ask yourself, okay, like what are the actual going to be the upward or the downward influences? And really on today's chain, I could see it breaking either way. Yes, I am swinging a call position into this. I have calls that I bought as soon as Trump announced the pause, but I have many weeks for those to expire. So I have a lot of time on those. They're not expiring anytime soon. So in terms of the zero DTE, yes, I would say my subconscious is I would love for this to go up because I know my swing position. But in terms of like good zero DT trading, like scalp trading, day trading today, I would just say wait wait to see what the trends really are, go through the process that we always do of what is the price structure? Are we making higher highs and higher lows, or are we making lower highs and lower lows? Ask yourself, what is the price structure? Ask yourself about momentum. Are we on top of the EMAs, or are we below the EMAs? Right now, ES is favoring the bears. The 5-minute, 10-minute, and 30-minute are bearish. The 4 hours just kind of flat, trying to decide what it wants to do. If you look at the NASDAQ, the 5-minute, the 10-minute, and the 30-minute are bearish, and then you have the 4 hour that's pretty like just indecisive of what's going on. So you want to ask yourself that. And then obviously you want to ask yourself what in the world is going on with options flow. This is the S&P 500 complex. Initially, we had bearishness for the first 3 minutes, and now we're starting to pop a little bit. Looking at the Mag 7, actually just strong. It popped, pulled back a little bit, caught a bid right here at 933. So thus far, if you were to throw on like just a linear regression, like line of best fit, it would obviously be a positive slope one. So paying attention to these two, life is way easier when they agreed, and then life is very easy when both of those agree and you're trading in the direction that they're trading in. Generally, you don't want to be fighting big money, and to sway the delta as much as we see throughout the day, it's big money moves. Folks, retail traders don't move the market. The only time retail traders really move the market is when all of retail is focused on a pretty small thing such as GameStop or AMC, like uniquely. But with respect to the overall market, retail traders aren't moving shit, folks. This is all big money, like big money. So generally, and this isn't always going to be true, but I find for retail traders, life is far easier if you are trading in the direction of big money. So paying attention to what's going on with options, paying attention to what's going on with price momentum, and then paying attention to what's going on with price structure. That is my little 3-step checklist, if you will, of what's going on with options, what's going on with price, and then what's going on with momentum. In order of priority, I like them all, but price structure followed by options, followed by momentum is my order of priority. I first like to know, are we making higher highs and higher lows? If you want to quickly get this tool, it's called Fractals. This is a free indicator, but that's what puts on this little green caret, puts on the little red caret, and it just kind of gives me that idea where, well, we literally just opened and we haven't even painted any, but you could just see, okay, are the highs getting higher or the lows getting lower? If I put on the 15-second, maybe it'll paint a couple here. Come on, load. It's trying to think. It's loaded. It's thinking. Does it want to embarrass me in front of all of you? Anyway, right there. Okay, they just finally painted right here. You can see lower highs and maybe higher lows. So that's more of a consolidation pattern. Lower highs, higher lows. But once again, or you could just do it. You could be like, I see that high, I see that high. This is just a quick little visual tool to make your life a little bit faster if you need to make some split-second decisions. Right now, it looks like price is trying to get back into this transition zone. Once again, this is that choppy transition zone. I would argue the bears have the upper hand below it. I would argue the bulls have the upper hand above it. And in there, I would say it's just the internal fight between the bulls and the bears. So we started in it. We puked out below. We are trying to currently battle back into it, and right now getting into this overall zone, and also the key open interest level, the key psychological level of 5,250 as of now is serving as resistance. If the market pushes above it, yep, you're then watching yesterday's close at 5,268, and if this is just a lower high and we start to puke, watch 5,225. That's another key open interest level. And then if that doesn't hold, you're watching 5,200. These are key psychological levels, but more importantly, they are key open interest levels, as in that's where we see quite a bit of positioning currently in real time in the market, which is why I mark them out every single day for you guys, because generally that's where we see these either bounces, rejections, breakthroughs, breakouts. Like generally, it's these key levels that you're going to want to know about, because that's where you're betting on reactions. And if we're in between these zones, well, then you just have to be patient and wait to see how things really do or don't play out. So we're currently 7 minutes into the day. Generally, when I'm trading well, I am not trading this early in the day. Sometimes I guess my lack of impulse control gets the better of me, and I end up firing off a trade a little bit too early. Sometimes it works. Sometimes it doesn't work. But I'm attempting to be really balanced today, because yesterday after the market closed, really when the futures market reopened, I did my first request on all of these current Apex accounts. And so it's pending right now. Actually, I wonder if did they give me an update? Here, let me log in really quick to see. I requested $40,000 from Apex last night. I think there's a very high probability they deny me, just because of the unrealized swings in my account through all this volatility. So I'm not, if I'm being honest, I'm not the most hopeful. Yeah, they're all under review. Here, I could show it to you. Why not? I'm not hiding anything. Right here, I requested on the 10th, right when the market reopened. These are all my current accounts, 521 all the way up to 541 or 540, and you can see that they're currently all under review. So I just have to wait. I did it right after I finished trading 8 days. Yesterday was the 8th trading day for these accounts, just to show you what's going on with them. They're here. They're all right. Whoa, we just got to pop out of nowhere. So I'm up about 13K, up about 14K on all 20 accounts, which means I'm up about $280,000 in the last trading day. Actually, can I see this? Trade performance. Here, I'm just trying to be as transparent as I possibly can be. Right. Okay. When can I start this? I guess I'll just pick a random date, generate. Let's see how I've been doing. Let's see how I hit generate, but now it's not behaving the way I thought it would. Sorry. These tabs are sometimes a pain in the ass to grab. So yeah, up about 201,000, it's saying. Is my math wrong? 14 times 20 should be 280. This is saying 201. I don't know what that's about, but yeah, those are the net gains. And it looks like I'm percent profitable about half the time. Remember, the market, you're going to be right about half the time, wrong about half the time, especially me. I'm going to be a little bit under 50 because of how aggressively I move my stop to break even, as you guys saw a lot yesterday. But remember, you shouldn't necessarily care about accuracy exclusively. You should care about your expected value in reality, your expected return. I find in retail trading, there's this massive emphasis of what percentage of the time are you right. But I do want to remind you that you could be right 90% of the time. As in 9 out of 10 trades, you make money and you could still be a net loser. So what matters is the percentage of time you're right multiplied by your average win size, and then you take away the percentage of time you're wrong multiplied by your average loss size. And for some reason in the retail space, especially for novice traders, they just stop at the question of how often are you right, and they don't care about the sizing. Folks, you can be right 99% of the time and still be a net loser. And on the flip side, you could be right 20% of the time and still be a net winner. It depends on, once again, the size of your average win and the size of your average loss. That's very, very important. And I just don't see that being discussed well or really at all in the retail space. In the retail space, there's this desire seemingly to find a trading system that is just right all of the time, of like, nope, it hits 95, 90, 98, 99% of the time. And yeah, it's not hard to build systems that are right 99% of the time. What's hard to do is build a system that's right 99% of the time and is also net profitable. Generally, the trade-off when you have higher accuracy is you're taking on more risk. That is most likely the correlation you're going to see as you start to look into trading systems. That is the trade-off. You will be right more often, but generally when you take a hit, it'll be a larger hit to your account. So just a little food for thought, something to like think about when you're maybe seeing some things on the internet of, oh, I'm right all this percentage of the time. It's like, okay, are you net profitable? Interesting to be bragging about being right so often, but what about your actual profit? What about that thing that, like actually matters, making money? So like I said, just a little food for thought. All right, we're about 12 minutes into the day. Here's a quick look at the Mag 7. Remember, this is the combo of Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla. Why do you look at the Mag 7? Well, we know that these things combined have about 30% weight in the S&P 500 and the NASDAQ. So this little grouping of stocks have a huge influence on what in the world is or is not happening. It looks like we are pumping right now. So Mag 7, obviously, a strong trend makes me lean bullish. Looking at the S&P 500, it was bearish at first, picked up 3 minutes into the day up until 9:40, so a nice 7-minute push. A little bit of a pullback here. Looks to be putting in a higher low, and ideally, it's going to continue to the upside. Price momentum is still bearish, but it looks to be repairing. I would love to see the 5-minute start to break up here. I'd love to see the 10-minute break up, and I would love to see the 30-minute specifically take out 5,318 on the ES, and then on the NASDAQ, same same thing. The 5 minutes trying to repair itself, the 10 minutes testing right now, and the 30 minute is actually taking out its recent one. So that's interesting. We started off with bearish momentum, but right now in real time, you're seeing a potential momentum reversal. Looking at price structure as we're just going through our process, obviously at first we started with lower highs and lower lows. We are now seeing higher highs and higher lows. Look at the succession of lows, higher, higher, higher. Look at the succession of highs, higher, higher, higher. So price trend is now bullish. Obviously, let me come back to this. Options flow is now bullish. And then we're just kind of waiting for momentum. So for me, in the way I engage in the market, we are almost at that perfect setup of like my bias of which way I should be day trading. So as soon as I see the momentum repair a little bit more, specifically, I want to see the 30 minute right back above this positive territory. I want to see us take out 5,318. I want to see, and the Qs are actually pushing right now. So this is potentially that turn. Potentially. You never know the next bar, but that's what I'm looking for. And then the only other thing I'd really need for my trade is to identify a low risk opportunity for me to get into the market. So just because everything's bullish structure, bullish momentum, and bullish flow, that doesn't mean you just at that point fire off a bullish trade, because you have to consider your risk to reward, because you're not always going to be right. And we talked about this, and I think some of you guys didn't believe me, but I think now some of you guys are actually like doing research. I know some of you are, and you're starting to realize that when I tell you the market is normally distributed, which is a super like fucking nerdy way to say whatever time frame you're on, the next bar, you have a 50-50 shot. It does not matter. If you could talk about the 15 second, you could talk about the weekly. The market is pretty much 50-50. If you look at any sizable data set, you're going to realize, oh, okay, it's about 50% green, 50% red for whatever time frame you're on. Technically, there is a slight edge for the bulls. For example, if you look on the daily bars, 54% of daily bars in existence are green, as in like the close is going to be higher than the open, and then obviously that would mean that 46% of them are red. So like I said, it's all in the world of 50% plus or minus 10%. The stock market, the way it works, it's about, you're in those bounds of 60-40. So whenever anyone asks you, you think the next bar is up? You think you think tomorrow's a green day? You think tomorrow's a red day? Dude, literally just flip a quarter. That's going to be your accuracy. Just flip a quarter and just kind of rip it from there. That's the name of the game. Like it truly is. Wow, we're popping now. All right, we're almost at the top of the transition zone. Like I said, bears had control there. They could not hold the control. That was a failed breakdown. By definition, a failed breakdown is bullish. It was bullish enough to get us into this transition zone. I wouldn't be chasing it right here because there is a chance of a rejection. So even if it breaks and rips, and yeah, maybe it does. And if you're chasing here, you're going to feel super, super smart. But if it gets rejected there, you're going to feel super, super stupid and say to yourself, why did I buy at resistance? When in reality, you probably should have bought on this turnaround at 942 so you could risk the recent low. That is your risk point. Right now, if we are rejected at 5,300, that's an 8-point gain while you are risking, what, at best 50 points? 8-point gain to a 50-point risk is not optimal risk to reward. So like I said, just because everything is pointing in a bullish or bearish direction for whatever time frame you care about, that doesn't necessarily mean it's time for you to trade that thing, because really, not only do you want to wait for everything to align in either the bullish or bearish direction, but then you have to have the patience to wait for the low risk entry. You want to get in where if you are wrong at that moment in time, because we know the market can turn on a dime, that your hit is not going to be that bad and potentially blow out your account. But I am seeing some nice green across the board. It looks like MicroStrategy is leading the pack higher with a nice gain of 6%. Tesla's up 1.6. Palantir slightly green. NVIDIA and Broadcom are both up 2.6. I would love what, like, we're seemingly trending into my bull case. My bull case trade of the day is from 5,300 to 5,350, and then obviously my reach target would be up here at 5,455. That is the closing value from 2 trading sessions ago. But first, I want to say is take out this key open interest level, key psychological level, key reaction level from yesterday. And then from there, I want to see us take out yesterday's high at 5,349. We'll just call it 5,350. So that would be my bull case. That's where I'm looking for price to drift. the perfect trade would be this: a breakout that then comes back and retests that level. We make a formation there, and then we bounce and break, and your trade entry is between arrows 3 and 4. This is where you would be getting in. So I don't know if that's what the market is going to give us, but that would be the easiest way, in my humble opinion, to play this potential 50-point move in the S&P 500, which would be roughly equivalent to $5 in the SPY. The perfect setup, and I have no idea if the market's going to give it to us, would be a breakout. They come back and retest it. That support holds, and then we start to trend up. And obviously, this would be happening with the momentum officially going bullish. And when I say the momentum officially going bullish, I'm referring to all these EMAs. We're on top. See how the 5, the 10, and the 30 are trying to stay on the top of their cloud. Obviously, you'd want to see that trend continue. You'd want to see the 5 and the 10 especially start to show a little bit of green. From there, you'd want to see a very bullish appetite in the market. And right now, look at that options flow. That is pretty darn bullish. That is pretty darn bullish. You'd want to see a continuation. Oh, what is this little pullback? Is that something I could take advantage of? Is that something I could take advantage of? This little pullback. Can I use that? Would I use this? How far away are we? Oh, that's about 70 points. Am I okay with 70 points? Am I okay with 70 points? We are on top of VWAP. I've kept forgetting to check that. That's another easy thing to know. Just give yourself a quick sanity check of the side of VWAP that you are on. Right. All right. A little bit of a flag situation. We're seemingly struggling at 600. We're seemingly on a little bit of the struggle bus here at 600. How is the options flow? What time of the day is it? Okay, it's 9:50. I believe we do profit. Do you know what's coming out at 10? Do we have like any of the Michigan numbers or something like that coming out at 10 today? If there is an announcement at 10, I'd rather just wait till 10 a.m. to actually do any trades. Generally, when it's me and trading on events and it's a 50-50 shot, as the market normally is, generally I'm on the wrong side of that coin flip. Hang on, something just happened in the S&P 500. Let me show you this. Not only are we running into that resistance that I've been calling out to you guys all day of why you don't chase right at that level, because we're expecting a reaction. If anything, you wait for the pullback. You don't buying at a breakout level, shorting at a breakdown level, generally not smart, because if you're at those extremes, it means by definition you're taking on the most risk possible, because if you're at the extreme, you're the farthest away from support or like your cut level you could possibly be. So when you see pumps like this and you're like, oh, that's a key level, buying right at that key level, you're basically saying, yes, I don't think we pull back at all. I think we're going to break out. And like I said, you have a 50-50 shot when not only do you have a 50-50 shot, which is fine if you want to trade that way, but the big issue there is the risk to reward, because if it doesn't break, there's no reward and you're just taking on maximal risk. Well, if you wait for a pullback, well, okay, you have now better defined reward, because if it gets rejected there again, you could get out there with some profit, but then you're minimizing your risk because you're a bit closer to whatever the recent swing is that you could base your trade off of. So and I get it, because there's that emotional thing of where you see the pump, and then a little pullback, and then another pump like right here at 949, and you get excited, and you're like, oh, no, that's like the trade I got to take, because there's this like driving psychological factor that you don't want to miss it. You're like, no, that might be the opportunity, and it might be, but then you always have to consider the risk reward of it. And actually, I'm liking this pullback. All right, I'm going to fire my first attempt on the day.
Order submitted.
I'm risking the swing low at 944. I'm hoping that this trendline breakout occurs, and then I just need to do some very, very quick math. All right, I'm not doing anything too crazy today. Nothing too loco. Okay. I really find no need of going for profit above 665 today. Obviously, you guys know I don't care that much about where I put my profit target. I care much more about my risk tolerance. So on this trend line breakout, really on the break of the intraday high, I'll ideally just move my stop up even more and just take my risk off the table, off the table, off the table. O market lords, please bless thy position, for I am in need of tendies, and you are the tendies master. I am your servant. Please lead me on the righteous path of green, very, very green returns. I always find that it's helpful whenever you get into a trade to really speak from the heart to the market gods controlling the situation. I find that it is very, very, very useful. All right, brother, let's cook it. Let's cook it. Your boy's looking for 1.5K today. I told myself that when I was crying in the shower this morning. Brother, don't go beyond 1.5K. Doesn't necessarily feel like your lucky day. So I am looking for 1.5K on all 20 accounts, which is a $30,000 return. You know what I'm going to do with that $30,000 return? I'm going to go to my local Fogo de Chao and I'm going to rent the entire thing out. And I'm going to sit there and I'm going to keep eating and eating and eating until they're worried about me mentally. Like, why is he eating by himself at a Fogo de Chao, rented out the entire place, and he's just crying, weeping like a middle school girl with her first heartbreak? That's my plan. That's what I want to do. This vision came to me as I was sleeping last night. But it wasn't just a vision. It wasn't just a dream. I would say it was an epiphany of sorts. I would say that the market gods and the Fogo de Chao gods were speaking to me. They tapped me on the shoulder and said, Matthew, this is the pathway forward. The way other religious figures had to part the sea, had to meander within the desert for 40 years. I know my pathway. My pathway is to sit in that Fogo de Chao until either they break or I do. And this is the path for me. This is the path for me. It's kind of a bummer that we actually just got pretty freaking close and then just nothing really happened. We really weren't that far away. A little bit of a bummer. Come on. At least let me sit in the green. It just mentally makes me feel better when I look over here and there's a bit of green. I wouldn't mind if this is a higher low, because then on a continuation to the upside, I could just move my stop to right there and have very, very minimal risk on this particular trade. But you guys know me, my favorite trade, my absolute favorite trade is where I just move my stop to break even and I literally take on no risk, which I'm kind of thinking about doing. I mean, I'm in at 89. This swing lows at 75. I just kind of want to let it cook, you know? You know? Sometimes you just got to let it cook there, team. Oh, it's moments like this that remind me. Trading has a lot of similarities with life in general. And I would say the major thing that I want to share with all of you today is the life wisdom that sometimes you got to get a little lost to get a little found. Folks, I'm not a scientist, but I know you cannot be found if you are not lost. So if you are trying to figure out life and you're like, dude, what's going on? Remember, the only way you can be found, a prerequisite to being found, is to initially be lost. So you always got to, by definition, it doesn't work any other way. By definition, you got to get a little lost to get a little found. And it's similar with price. Price has to get a little lost to get a little found. You know, it's pretty much the same thing. I think you guys are picking up what I'm putting down. I think you guys understand it. I'm just a dude pretending to be another dude. Come on. Come on. We're just waiting. Just waiting. I would very much prefer that the market breaks out above that trend line. I should probably check some things because it looks like some prelim numbers might be coming out at 10, and I really thought I'd be out of this trade by 10, and now I'm getting a little bit nervous. my initial plan, I mean, and heck, we got super close. I was like, oh, okay, this is going to be the push that works for me. So I didn't think I really had reason to panic. And I was like, dude, you're going to have 5 minutes to spare. I saw that pump. I was like, dude, you're good. You're going to be out by 9:55, 9:56. And it looked like the market had other plans for me. It said, how about we make you about break even and let you sweat the event? That's what the market said. And I'm not necessarily the biggest fan of that. Not really the most appreciative of the market. And look they're dancing around right at 5,300. 5 minute, 10 minute, 30 minute, trying to be bullish. 5 minute, 10 minute, 30 minute, trying to be bullish. Higher highs, higher lows, a little bit of a pullback right now. A little bit of a stall out type of a situation. What is this low? The 950 low. Where's 950? 950. Okay, that 950 low. I'd prefer that not be broken. I'd very much prefer that not be broken. I'd prefer that this trend line be broken. I would very much prefer that. What was the other thing I need to check? Options flow. How's the options looking into this? Okay, the S&P 500 pop up until 955 where I almost got out, and then options settling down a little bit. The Mag 7 is actually still long and strong, which makes me actually feel pretty good about this. I just need to, I believe, have the patience. And I'm just worried about what if it just wicks me out? I'm going to be so pissed off. All right, I have about 12 seconds to decide. Do I want to move my stop down a little bit just to not get wicked? I feel like when I do that, it's always the wrong decision. I feel like Yep.
Order canceled.
I knew it. Fucking knew it. Wick me out. Watch it. It's coming back anyway. Oh, it's coming back anyway. Called it beforehand. Son of a bitch, dude. So the reason I didn't move it is because there is a non-zero probability that what if the report comes out and not only does it hit it, but it keeps going. That's the event where you're just like, the Michigan. And whenever the Michigan numbers come out, people like generally freak out, and we'll see. But the reason I can't move it, literally was calling it beforehand, was because in the non-0% chance pathway, what if it's bad and then keeps going? And instead of taking this off, what if it doubles or triples from there? It just becomes brutal. It ain't coming back. Oh, I fully disagree with you. I don't think you're really basing that off anything beyond your own bias on this situation. We've traded these setups a gazillion times before, and we've seen it before. We see these wicks, we see the reactions, and just here we are. Actually, do I want to get back in right now? All right, we'll play the recovery and we'll see what we could do. We'll see, is this going to hold? We'll see what we can do. Fuck. Dude, it just keeps coming from me. Nope, lower high. All right, I need to wait for a second. I thought on my other screen I could see we were right at that closing value, and I thought that was going to be support. And I was just waiting for like a little push, waited for that push right there. But I was looking at the SPX and saying, oh, okay, we're at the previous close, and generally the green to red move, or red to green right here. I was basically trying to play a bounce off this line, a puke to it. But obviously the market had other opinions. So I'm just going to chill for a second and see what's actually going on. Tesla taking a bit more of a hit. Kind of popped up to 254 and then quickly lost $6. But 1, 2, 3, 4, 5, 6 red minutes in a row. And the bummer here is if I gave this more range, this very first trade, I bet with patience that it would be perfectly fine. Like I truly, truly believe it. But it all comes back to, if you keep trading that way time and time again, you eventually find the bad beat that it doesn't come back. And it's in that event that you then lose your entire account. So the reason, even if you're like absurdly confident, remember, There's no such thing as 100% guarantee. So because I can't guarantee myself that we're going to be coming back, you have to just keep your risk low. And that's exactly why I risked this low, it got knocked. I risked that low, it got knocked. So basically it's casting a lure into the pond and you're trying to catch, but you can never be absurdly confident on one particular one because you just don't know the pullback. You don't know what's going to go on. And what's really nice about this market is also the exact same reason of why it's painful, is if you're getting something wrong and you take a loss, like I'm down 2.6K right now, there's such gigantic range that if you're just patient and you wait for the right setup, the market's going to reward you because this thing is moving hundreds of points like it's nothing. So if you're just patient and wait for the right trade, you're going to make it all back and then some. And that's exactly what you guys have been seeing in my accounts now for days. Is like, yeah, you take a hit there, you take a hit there, whatever. Because as soon as you get on the right side of the trend, man, oh man, does it go. Man, oh man, does it really get going. So that's why I refused to move my stop. I just didn't think it was appropriate. Dude, look at this. Is it actually gonna save it here? I just keep looking at the closing value of yesterday and we're finding a bit of a reaction. So the 5-minute try to go bullish got smacked. The 10-minute try to go bullish got smacked. Same thing with the 30. The 5-minute try to go bullish, smacked. 10-minute smacked. So really what I'm looking for now is a recapture of 18,582 and then a recapture of 5,319. Obviously, the latter for ES and the former for NQ. But right now, we're seeing an outsized reaction to these Michigan numbers, which seemingly happens every other Friday. Sometimes they have enough. Dude, is this it? Oh, let's look at this. All right. So starting at 954, S&P 500 options took quite the hit. We're getting a little bit of a rebound right now. The Mag 7 is still strong. Even though price took that big of a hit, it's holding on strong, which really does make me believe we're going back to intraday highs. And I think given enough time, we're going to be breaking out of 5,300 today. And once again, my reasoning for that is the strength in the Mag 7 flow. So if the SPY can actually pick back up here, this might just be the little bit of an overreaction. I would say. Do I want to risk that? I'm going to give this a second. Obviously, because I already have these two losses locked in, it's just so frustrating. I really do think that waiting enough on this trade or on this trade would be perfectly fine. But you have to overcome that frustration and understand that, well, if you keep trading that way, it is a pathway to blowing out. Just because eventually you find the bad beat that you can't withstand and it still pulls back a little bit more than you anticipated, enough to the point that you lose your accounts, and then it is what it is. So as frustrating as it is, as confident as I am in the bullish setup right now, you still have to honor your risk. And that is the thing that is probably the hardest in trading, is just like trading. You're like, I'm wrong. And no human likes that. No human likes day over day just saying, I'm wrong. But you have to kind of master that internal skill as a trader to be able to pull it off. You have to. It's also just absurdly frustrating that I was so close and I just wanted to be done for the day and call it an early Friday, and it just didn't hit. We were about 17 points away. I just needed a little bit higher. Or if I entered a little bit earlier, it might have been hitting by that point. So, hey, luck cuts both ways, folks. It really, really does. Sometimes you're going to get absurdly lucky. I've shown it to you guys on the show where it just seemingly, no matter what I do, I can't do it wrong. And then other times you're going to get absurdly unlucky, like the market's overreaction, like to this. All right, that's my cue. That's my cue. That is my cue. That is my cue. 30. Let's take out 600. Let's see. Look at that. Already got back half my loss. That's exactly what I'm saying. Is this market with these movements and these ranges as dangerous as it can be if you're on the wrong side of it? And that's why you got to just admit when you're wrong to try to keep those losses small, because once again, if you can actually catch the trend, it rewards you so much. And I predicted this. I said that trade will be fine. That trade will be fine. And yet you just have to do it just in case. Just even if there's a 5% chance that maybe your prediction is wrong, only 5%. Well, 1 in 20 times you do that, you're going to blow out your account then. So even though I've been telling you guys, like, no, I really think this is going to happen, you still have to set your risk because of that. Even if it's a small percent chance, you can't risk blowing out. You just can't. I would obviously, if you guys have seen me at all, you know I very much want to move my risk up. I just want to see us take out the intraday high. Once we take out this intraday high of roughly 18,600 and I don't know, 47, 48, it's what we saw around 954. As soon as we push that, I'll move my stop up to break even, and then I have a lottery ticket play. Worst case scenario is I make no money on it. Best case scenario is I catch a trend. You catch the white whale and you get to ride it. So that is like, I'm literally giving you my trading plan right now. You saw the entry. I explained why I got in. You have seen the first two trades, literally just being as transparent as I possibly can right here. But I'm looking for this pump. That's a nice pump, a pullback. I'm looking for a higher low. I would hope that this higher low very much holds. But once again, you never know. You never know in crazy markets like this. Come on, pump it for me. Pump it, pump it, pump it, pump it. Pump it, pump it, pump it, pump it. Louder. Pump it, pump it, pump it, pump it. All right, want to take out this recent high at 23. Then I want it to take out 48. Upon it taking 48, I'm moving my stop to break even so I don't have to risk anything. And then when you have a lottery ticket, you have a lottery ticket. You know? When you have a lotto ticket, you have a lotto ticket. All right, we're coming right back up to this battle of 5,300, which I literally called out to all of you before the market opened. Above that, this is the transitional zone where, yes, you should expect chop. Above it, I would say the bulls are in control, and my first target would be 5,350. My next target, well, watch the psychological level of 5,400, but really I'm watching the closing value from 2 trading sessions ago at 5,455. Let's take a look at the options flow. The Mag 7 is still pretty strong. Let's go to the 30-second chart. You could see the overall trend. Looking at the S&P 500, a little bit of a recovery going flat right now. We're going to need this to pick up for it to break out because this will prove to be resistance. But kind of going, no, don't come back. I would much prefer that this recent 54 holds. That might mess me up a little bit because if we don't keep pushing here, then we officially just have a lower high, and that's not what I want to be seeing right now. I want the structure to be continually building out, obviously in favor of my trade. And instead, we're coming to this trend line. Come on. Don't test it. No. What's happening? Is the SPY breaking the wrong way? Oh, this is the painful thing. We are, just potential shoulder here at 5,300. It's just the breakout is apparently not happening right now, at least not on that push. And we just got a little bit smoked there. Shit. Not again. Dude, is this just going to be the same thing where I get wicked out again? Fuck. All right, how do I want to play this? All right, maybe we find a bit of support here. Okay, maybe I need to update my plan of attack. Maybe my new plan of attack should be something more like, well, hang on. I can't do anything with my plan of attack if it just comes completely down and vomits. Can't do anything in that particular circumstance. I'm just... How much risk am I really willing to take on this particular trade? 530, 430. So this is another 2K. I really don't necessarily even want to be taking on this risk. Oh, brother. Oh, brother. Oh, brother. Oh, brother. Oh, brother. These ranges are just so big. Obviously, the structure is easy to play, but then when you realize like how big the swings are, that's where you get obviously the large impacts economically to your account. I can't do it. I can't take on more risk. That would just be would not be the shrewd move. So we're looking a little bit more for the praying, I suppose. We're looking a little bit more for the praying. Come on, don't do this. How far off is that? That is 33. That's 11. 400. All right, hang on. Let me go to this wick just so I have time to check something else out. Just so I have, okay. So the SPY did come right back to that closing value, and so did the Qs. So we saw a little bit of support here. I'm hoping support is once again found at this closing. So what's happening is we're finding quite a bit of resistance at 5,300 key options level, key psychological level, but then we're finding quite a bit of support at the closing value from yesterday, as in the green to red move showing a lot of support. So we're in this very tight range, but coming into this range, it was obviously a bullish push. So we had this bullish push, and then we got caught up in this range that unfortunately the range swing is 32 points. So trying to wait and battle it out through this range can be a very painful thing, as you've been seeing from my trades, because I don't necessarily want to take on the risk of the entire range, because if you're wrong and the other side of the range pukes out, it could be a serious hit. So I would much prefer that. Even there, that pop got me slightly back green. I'm trying to keep it patient and understand that, hey, you kind of have to use these swings, and I'm hoping that I'm reading the situation right. I'm hoping a lot of other market participants are seeing what I'm seeing, and I think if I could just stomach it and like white knuckle this move for right now, I think I will be rewarded. Truly, I think we are going to break 5,300 at some point today, but even let's just say I'm 70% sure. Well, then there's a 30% chance that if I'm wrong, I still need to protect myself just so I don't lose my accounts. I very much want these accounts to survive today. I can't let them blow out because I just did that request, and I would love to see if I could get that payment. So I also have to consider that literally at least give your shot for the payment. Give yourself a shot for the payment. All right, let me do some math here. What are we doing, brother? Of course, it has to make me make my decisions right where you're roughly break even. Like, why couldn't it just be dancing around at the high where I'm in the green, but not like really feeling the smoke? What data can you prove that was back tested for us to see 5,300? No, that's an options read. That's live open interest. There's a lot of people reacting there. So it's understanding the Greek implications, specifically delta and gamma, and what it's going to force the market makers to do if we're above or below that value. You have to look at the deltas either being added or removed as price either goes up or down, and also remember, gamma's highest at the money with the least time less. So if there's a lot of open interest at a particular strike, when you get there, it's going to have the biggest gamma sway. So that's why when you get to these key levels, that's commonly why you see the reactions, because not only do you have market makers reacting to re-hedging their book, once again, because of the delta and gamma implications, but on top of it, you have all these traders who are either now in the money or out of the money, and then that's most likely going to prompt them to make some sort of decision of what they want to do with their live play, as it's either going in the money or maybe it's going out of the money, like whatever, depending on the direction you're coming from and depending on the direction that they decided to play it. It's not like 5,300 itself is like a historically important level, like just through the time of the market. Yes, we've seen reaction there, but we're seeing reaction right there in real time because of how many people are playing it. It's not like there's anything really special about 5,300 as like the number itself. Obviously, it's because so many active trading participants are in one way or another targeting that level or considering that level in their trade. So then it makes it so everyone else has to as well. And you can see it. Like, not only can we see it in terms of open interest by using things like spot gamma, but then we're seeing it in real-time price action. fuck, are we retesting this? Technically the highs are getting lower, but the lows are also the highs are getting lower and the lows are getting higher, but I'm not liking this trend at all. I'm not liking that this recent bounce didn't keep going. Not a fan, not a fan, not a fan. Chop, chop, chop. Your boy is caught up in chop, and I'm at the point where I'm just hoping that I can get lucky and the chop ends and breaks in my favor. But of course, there's always the chance that I either get chopped out, even though I'm going to be right, and there's also the chance that the chop breaks not in my favor, and I'm just legit wrong. So, we're at that point where you're just wondering if you could get a little bit lucky. I really thought that this pump here at 10:15 was going to be it, because the news is already being digested. We're past the hour movement, like that 10 a.m. kind of craziness that we see, and we started to recover with the overall trend, and we're at that key level that a lot of people were seemingly targeting. I really thought we'd at least get this trend line test and a break. I was thinking about going break even, but obviously it dramatically undershot what I wanted it to be. Dramatically undershot what it wanted it to be. All right, so I need to start to consider how much pain can I take, because the name of the game is to just not blow the accounts out. The name of the game is to just not blow the accounts out. What is going on with the flow? That I'm not liking this, because before we were just continually finding support, like obviously support. But now we're in that red territory. Tesla's having a tough day. Fuck, it's coming for me. Bounce. Nope. It's coming for 400. I could have been a little bit more tactical and targeted 400 just to see if there's a bounce there, but this trend line breakdown is not good. I was hoping for the third time we would continue to save ourselves here at this the green to red move, but as you can see, that literally just broke down. So now we have this succession of, you could argue from 954, even though we had this big recovery, you could argue lower highs and lower lows. So price structure going from starting off bearish, then going bullish, now back to bearish. My last stand was obviously that swing low at 1003, because from here, you just have to admit to yourself, you don't know the next movement. The next movement couldn't just be a capitulation. I still think there's actually, like right here, we're just at another level of support, 5,250. Once again, comes back to that same level of 5,300. It's just a key open interest level. It's a key psychological level. It's a value that a lot of people are going to be reacting to. So maybe we find support here. If it doesn't break, or if it does break, I'd be looking at the intraday low. And if anything, I'd actually be looking for this puke to 5,225. But a little bit of a fake out here. The 5-minute try to go bullish, we were hanging out, smacked. The 10-minute try to go bullish, hanging out here, smacked. Same thing with the 30-minute try to hang out, smacked. 4 hours just going flat. Looking at the NASDAQ, it's the exact same story, literally the exact same story. Try to go bullish, showed some higher low, had a nice bounce here at 10.05, which this is what the bar that gave me hope that, okay, we're actually going to be reversing this trend. Nope, 2 bars later, we actually got the breakdown. So the bulls tried to put in a fight this morning, but literally right when I just got out there, that was kind of the dagger in the heart, at least for now. And it's not even necessarily holding 5,250. Let's see if it is going to hold this zone. So basically, we started off in the bearish territory. Then we got into this transition zone. Once again, this was fully called out to everyone beforehand. And we tried to break, and had a very, very lackluster final push that did not protect itself at the closing value. And then we just got a quick capitulation. Looking at the options flow, what's going on here? Well, this is the issue. At 1017, just absolutely down. So the options market pumped, the price started to chop, options started to chop, and then the dagger move was starting at 1017. You could see it literally, the deltas just started dropping like crazy. And then that caused price to drop, and that's what we're seeing right now. So everything was favoring the bulls on a basis, or I would say up until about 1019. So not only at 1019, we got price breakdown, which is obviously important, but really it's when you saw the deltas also break down. Options flow right there. I mean, you could see this pump, chop, 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 snap. Looking at the S&P 500, pretty strong up until 955. We puked, we bounced. Even though price came all the way up, it was a bit divergent. The deltas, even though price roughly where price was before, the options nowhere near as strong, and then kind of danced around. And then once again, something happened at 1016, 1017, right before 1020. You could see the deltas like really starting to turn there. And we're already at this next level of 25. All right, that would be one level. And then if this doesn't hold, remember, it's always an if-then statement. If we break, that's my next level. If we bounce up to here. It's always the game of if the bulls are winning, if the bears are winning, and then just know the levels to pay attention to. So we just puked and made a fresh low. We really puked quick on that. Really puked quick. And now my next level would be all the way down here at 5,200 flat. But let's see. I wonder if we are going to bounce out of this. Well, choppy mess thus far. Choppy mess, and even more painful is big ranges. But I guess I'm happy I had my risk where I did, because if I had till now, the accounts would actually legitimately be gone. Speaking of that, how much buffer do I have now? I have 8K worth of buffer. That's usable. It's not good. It's not bad. But yeah, I got out right here because that just happened to be this swing low at 942. I was using that. In reality, if you took this breakdown, which that would have been beautiful. Imagine going short right here at 477. You were already up at like 150 points. If you took that pennant breakdown trade, risking just whatever this like wick high is, that ended up being super, super nice. Did any of you trade this breakdown, this trend line breakdown at 1019? That's right when the delta really started to puke. Like right when the delta really started to puke. If you took that, massive congrats. That worked out beautifully. Absolutely beautifully. Worked out. I'm looking at the flow now. Hang on, I'm trying to see what's going on. Yeah, just a little bit of a bounce off a fresh delta low. A little bit of a bounce. Recovery, puke, coming right back up. Now trying to decide if it actually wants to get above this or below this. All right, let's give that a second. All right, well, while we're waiting to see if this is like a little fake out sweep, we see this a lot in the market where you have established lows, which would have been, I don't know, right around right there, where it goes below it because a lot of people just have their stops there. And then it bounces right back up. So just like kind of a fake out. Now, of course, if it's a legit sell off, this is also what it could look like, which is why you would just be watching to see if this bounce starts to fail. Obviously, some early indication you could have would be just tracking what's going on with options. Are options trying to recover? Right now, I'm seeing a tiny bit of a bounce in the SPY. I'm seeing a tiny bit of a bounce of the Q. So if it keeps going, okay, yeah, maybe. Or it could just be like a little bit of a dead cat situation and it just continues to roll over. Potentially how that is right there. Okay. Do I want to take this? Do I want to take this? Do I want to take it? Do I want to take it? So your odds are going to be 50-50, roughly. It's more of what is your risk? What is your reward? What is your risk? What is your reward? All right, I'll take a stab at it. Literally just risking that recent spike. I need to keep my risk even more under control given the current circumstance. Even more under control. More. And it's coming for me. This might just not be my day. Shit. I feel like everything I do, like, and I'm trying to be patient and waiting for it. Like, I go through my checklist and I try to increase my odds, I say, okay, 5 minute is bearish, 10 minute is bearish, 30 minute is bearish, 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 bearish. I look at the flow and I say, okay, flow went from bullish, started to puke, went from bullish, started to puke. So I look at options flow, that is now down. I look at momentum, now that is down, now that is down. I look at structure, we now have lower highs and lower lows. It's just, with these ranges, I'm forced to keep risk points that I normally wouldn't. So in my normal trade style, I would go on a bigger time frame and be like, okay, that's the swing high, and I'd be using the 1016 high. But in this high vol environment, that's so many points away that my account literally cannot withstand that as a risk point. So I have to use a super close one, which, like, when you're using super close risk points, you're basically just saying, yeah, like, I think it's just going to keep going. It's going to keep going right now. So you just can't really give the market much time to breathe, because if you use those other risk points, yeah, like, there's a good chance of it working out, but it comes back to the scenario of, if you're wrong, can you withstand that loss? And obviously, for how many points away that swing high is, my account obviously cannot withstand that risk. Like, clearly it would be just blown out multiple times over. So like I say, when things are going wrong, you have to just fall back on the process that you have. My process is to look at price structure, options flow, and price momentum in that order. I also like to do some sanity checks of, am I on the right side of VWAP? So even before, when I tried to play that bounce, not only was it the trying to play the bounce off of like just the previous close, but it was a VWAP bounce as well. I very much like that trade, and it just didn't break my way that time. That's fine. But now I'm kind of basically saying, not only do I think it's going to puke, but I think it's going to puke like now, because I can't let it swing that much against me, or I'll just be digging myself deeper into a hole. So looking for this to ideally take out, but we're gonna let it cook a little. I'm gonna put an alert, and I hope I hear this alert soon, and we're just gonna kind of let it go from there. I hope I hear that alert, and I hope, oh, okay, I'm going potentially a little bit. Remember, if 225 doesn't hold the next level, I think there's about a good 25 point movement in SPX. The next open interest level is here, but remember, this is a key level. So I don't know if it's going to break. I don't know if it's going to bounce. But I'm saying if it were to break, I think the SPY would drop another about $2.50. I think SPX would drop about 25 points. And knowing my luck, especially based on what the fuck's going on today, it will happen, but first it wants to wick me out before it allows me to do that. Don't forget, we're about to do a Payday Friday giveaway. Pinned to the top of chat in the description of the video. You can sign up. We're going to pick someone from YouTube. We're going to pick someone from Rumble. We're going to pick 3 people from locals. Dude, I'm just getting my ass handed to me today. Every single time I'm like patient. It's almost like right now this craziness is, it would have been more rewarding for the trades I had if I was front running instead of like waiting for the things to align, because by the time I wait for things to align, great, it aligns. And then that's seemingly the point that we're getting these reversals. We've clearly today had a bull phase, a chop phase, and a bear phase. And by the time I'm waiting for those phases to actually be confirmed, it's at the end of said phase. And then, dude, it feels like it's coming for me. This is a painful one, but that's also trading. You can bitch and cry about it, but it just is what trading is. There's quite a bit of randomness to it. And if you're a person who can't stomach randomness, if you're like, nope, I just got to be right every single time, it's only a matter of time before you're in very, very serious pain. Very serious pain. And today it seems like there's unfortunately a succession of things going against me. And I can't even take that swing long. Yeah, it's coming for me right now. Do I just want to close this out early? Or do I think... I was literally about to say, do I think I'm going to get lucky as a person who's had nothing but unlucky hits today? I could save myself $200. Yeah. Fuck, man. It's just, look at, breaking down. Nope. Right back up into the transition zone. Like, shit, dude. What a choppy fucking mess we have going on right now. Bullish, chop, higher low, looks like it's going to go. Nope, fake out, saves itself. Nope, we're actually going to puke. Okay, we overshoot it, we chop here, we bounce, we're about to come. Nope, we're sending it right back up. This is a bad environment. Like, this is, folks, this is a painful one. This is I just cannot, like, and even that, a little fake out break, fuckers. What's the flow looking like? Is options turning? I am getting absolutely pummeled by the market right now. Absolutely. And what the crazy thing is I'm actually happy with my trades. Like, I really am. Like, I'm happy with the entries that I've been taking. I've been happy with my risks. It's just, we're getting stopped the fuck out. All right. Maybe what I need to do is punt it long, use the intraday. Seven. All right. Maybe instead of approaching it intelligently, maybe what I need to do is just not give a shit about it. Every setup be right and price still goes against you. I mean, yeah, it happens. You can wait for the perfect setup. I guess the best analogy would be something like, you can be dealt pocket aces and still lose, and you could be dealt a 7-2 offsuit and still win. And the reason you're going to see that, especially in trading, is because you put the bet on the table. The die are in the air. You make your trade. You're bullish or you're bearish or whatever, and you choose to express it in whatever way you do. Great. Congratulations. Now, from there, the movement that's about to happen, that's either going to favor you or doesn't, that's all dependent on people who are about to trade. You don't know what they're going to do. That's why the market is 50-50, folks. The next bar, being red or green, is 50-50. Those are the odds of the market. You can do the research yourself. You can read one of the countless research articles done on this. It is effectively 50-50 with a slight favoritism towards the bulls. But this is, on a day like today, it's even more brutal because we start off bearish. Okay, so maybe you try to play this rejection. Nope, you're screwed. And we rip all the way up to the top of the transition zone. We puke down to the bottom of the transition zone. We rip to the top of the transition zone. We come here. We find support at the closing value. We look to bounce. Nope, it's an undershoot, and we vomit. And not only do we vomit below into the red territory, we vomit out of the transition zone, make barely a new intraday low. We bounce off of this key support, and then we quickly bounce right back up into the transition zone. This is just a choppy fucking mess. Please be careful. I'm obviously trading it because I'm hoping that this particular trade, my gazillionth trade of the day, is the one that finally catches a nice trend. But the way it's been going doesn't feel like it, man. Does not feel like it by any means. All right, I'm watching that trend line and I'm watching that trend line. So I'm hoping that those break. I'm hoping I don't hear this alert. And we're going to see. Here, I'll set an alert on this trend line break. I'll set an alert on this trend line break. And then I also have an alert set on a potential reversal if we take out this 1030 low. So we're just, be prepared for a chop mess. We're literally in that chop mess. This white block is where both gamma and delta are transitioning. So it means that it's like, by definition, by like the math of options, it means the market makers are kind of sitting there and you're going to see like not nice trendy movement. But I would hope, what I'm looking for is a push all the way up to this top side at 5,300. And then from there, the actual bulls take control and we get to move all the way up to 5,350. But this is just, if we turn at any point here, it's still just a lower high. It really, really is. So maybe we find some support, but we did get back up into this transition. This is just dog shit, dude. I'm roughly break even. after getting basically my unit risk is about $2,000, about 100 points, because that's a good chunk of the ATR that we're moving right now. And as you can see, I just took 3 losses in a row, 2K, 2K, 2K. So when we talk about the unit sizing, not exactly the right math, but kind of the right math is for me about right now, based on the ATR of how much NQ moves, is about my 1 unit is about 100 points. And 100 points, unfortunately, generally my unit size is closer like to 20 or 30, but because vol is so high and because we're moving so much, obviously as the ATR expands, your unit sizing is also inherently has to expand. So you could just see right there, loss after loss after loss. So basically on the wrong side of a 50-50 bet 3 times in a row, which the chances of that are 12.5%. So I am not on the right side of the bet. Basically bad beats. And unfortunately, this does not look so good right now. This is starting to curl against me. We're clearly finding resistance at that red to green move. So like I said, I think I need to go back to my other major trading strategy of out of sight, out of mind, and just the prey. So let's do a Payday Friday giveaway. We're giving away cold hard cash, $150, and also Vanquish accounts. Vanquish is running an incredible deal right now of not only do you get 25% off, but you get 2 free resets. So if you don't pass the test, you got a free reset. If you don't pass that test, you got another free reset. And that entire time, you already are on top of that getting 25% off. So if you're trying to do sim to funded trading in options, as in you are basically attempting to trade with someone else's money, lowering your own risk. Right now, Vanquish has always been the best to do it for options. And right now, you're getting an incredibly good deal to do it. 25% off and 2 free resets. Just make sure to use that code Goonie. It is pinned to the top of chat. It's in the description of the video. And obviously, they are the partner of these Payday Fridays. So we're giving away those 3 prop accounts from Vanquish. We're giving away $150. And obviously, on top of that, if you guys want, you could get that pretty awesome deal from Apex. Use that code Goonie to save 20% and get 2 bonus reset credits. So what we are going to be doing is picking a random person from YouTube, picking a random person from Rumble, and picking 3 random people from locals. Those 5 people will then be put into a race, and the winner of the race is getting the cold hard cash. The people who are going to be getting the Vanquish credits are going to be the 3 people selected from locals. So that one is going to be the one that I picked last. You guys have time to enter. 120 people have already figured it out. It's pinned to the top of chat. It's in the description of the video. When you come to the locals community, it's literally the top main pin message. All I need from you is a way to reach out to you. So if you're the winner, I can contact you either for the money or for the Vanquish accounts or for both. But basically, I just need the best way to contact you. So we're going to be doing that. You can enter on all of these. It's not like you just have to pick one. You could try to be the YouTube person. You could try to be the Rumble person. You could try to be the locals person. You can you could attempt to be in on all of those. I just want to clarify. So we're going to do this one last. So you still have time to throw your name in on locals and sign up if you haven't done it. But in the meantime, we're going to start off by picking someone off of YouTube. YouTube. Hang on. For some reason, I got kicked out of my Nightbot, so I need to re-log in. Hold your horses. Giveaways. Okay. You guys, you could see yourself furiously commenting. We're doing a random number. We have a decent amount of people in here today. It's open to anyone. So it's going to be a number between 1 and 150, including 1 and 150. The first person to comment it is going to be the winner. So we are going in 5, 4, 3, 2, 1. All right. It's between 1 and 150. 1 and 150. 1 and 150. JD McKinney, 83. Congratulations, JD McKinney. I don't know what the number was. It's not showing it to me, but you were the first person to comment it. So you are going to be representing the red land of YouTube. Just got an alert of the Qs trying to break out of their trend line, which also happens to be the red to green move. So paying attention to that. And then obviously I am now slightly green, but I have a lot more room to make up if I want to go net green on the day. I have a lot more room to make up. A lot more room. All right. I'd prefer that these hold. I'm moving up the risk. All right, the next level I care about is all the way up here. Still looking for that trend line to break on the SPY. And then from there, I'd be watching top target 527.64. And then obviously I don't want it to reverse below 523. Same thing with the Qs. I want it above 449 and not to reverse below 444.50. But both are battling it out at the equilibrium point of yesterday's close. Like literally that's where we close. This is where the SPY decides if it wants to be green or red on the day. So above it, okay, that should be interesting. Below it, also going to be interesting depending on which way you look at it. But all right, so we have our representative from YouTube. Now we need our representative from, random number generator. All right, we're going to go between 10 and 25. We're going to be picking someone off of Rumble. Off of Rumble. The number is 16. 16. All right, we got to pause that for a quick second. All right, so we're going 16 comments below J. Keith. 16 comments. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. Firefox 918. Firefox 918. All right, excellent. We have our representation from the green land of Rumble. And then we also have to now pick our people off of locals. There was 135 people who entered. So between 1 and 135. All right, generate 112. Okay. 131. All right, deep. And then 122. All right, these are all pretty deep. All right. All right, the SPY is now at its trend line, so let's see if that could actually hold. The Qs are trying to, both of these are testing right now. I do want to be clear, we're in this transition zone, but if we pump, look at this recent high at 1016, which was pretty much the start of the options getting hit, which led price down. See if we could recapture that, and then from there, look at that test of 5,300. Oh, where am I at? Where am I at on this play? I'm up 70 points. Should I just move it to break even? I got to do something, dude. I can't take another hit. I got to get myself winner in a hole. Stop digging, right, brother? Right. Do I want to do it? I feel like whenever I'm asking, do I want to do it? It kind of tells me that the answer is yes. And it's something going on in my subconscious or conscious that makes me not want to do it. Because like, you're like, well, hang on. What if it like comes back, knocks you out, and then goes? Like, it's like, yeah, maybe. What if it just completely nosedives because someone tweets something and the market goes into pandemonium? I mean, I was literally up 100 points. It feels not like when you go up an entire unit, really, remember, we're talking about like, 100 points being a unit right now based on ATR. At least that's how I'm managing it. I just went up an entire unit. I feel like I need to, but also we have this swing low. It could just so easily knock you out. So easily, especially when you're at these like big test zones. All right. I moved my stop to break even. So I'm no longer digging. When you're in a hole, you got to stop digging. That's, I feel like, a good lesson. When you're a little bit lost, you got to get a little bit found. And when you're a little lost and attempting to get a little found, you got to not keep wandering around in the wilderness. And I'm a lost little puppy in the wilderness right now. For whatever reason, I was separated from the pack. I don't know what the hell I'm doing. And to have any shot of pulling this off, you got to at least try to protect yourself a little bit. So, knowing my luck, it's going to, I do like this shelf though. See, I like that low and I like that low. I guess you can maybe argue. I just hope my life is easy on this one. After getting my dick handed to me on the first 3, I'm hoping that I can catch this trend. All right, trend line breakout, recapturing the red to green move. Watch 527.64, watch 448.83, and maybe your boy has a fighting chance. All right, so anyway, 112, 122, and 131 was selected. These need to be I sort it by the oldest. Okay, this was the first one. All right, so 25 per page. So if you count them up, that is 25. At the bottom of this page, that would be bringing us, whenever it loads, to 50. Come on, load. That is 50. That means the bottom of this next page is going to be 75 whenever it loads. Come on. Load. All right. 75. The bottom of this next page is going to be 100. And now we're going to start finding some of our winners. All right. So that is 100, 101, 102, 103, 104, 105, 106, 107, 108, 109, 110, 111, 112. Gen X Lee. Gen X Lee. That's 112, 113, 14, 15, 16, 17, 18, 19, 20, 21, 22. Cats. I don't need the cash. All right. Well, if you end up being the winner, we'll double the prize next week. That's 122. The bottom of this page is 125, 126, 127, 128, 129, 130, 131. Tire Slayer. This is the second. You literally raced last week. Tire Slayer. All right. Well, we got our people. How are we looking over here? All right, a little bit of a pullback. How much? I am not feeling good about today, folks. Not feeling the best, dude. Is this really just gonna knock me out and then go? I could take a good chunk out of my loss and just end my misery. Obviously, here's my realized gain, here's my unrealized, and then those two put together, here's my total. The unrealized and the total are obviously dynamic as the realized is realized, so it's locked in. The reason I moved my stop up to break even is to obviously not dig myself into a further hole. I did go up an entire unit. I went up an entire 100 points. So it feels like silly to go up 100 points and then somehow potentially let that cost you money. So that's kind of my thought process. I'm maybe a little bit jumpy. Maybe I'm a little bit early to fire the gun just because of my existing losses. But if it's just not tested, then I don't have to sweat it. But obviously I am taking on the risk of that. Come on, don't do this. It's having the toughest time staying green. Like, we tried to push green, smacked it. Tried to push more green and hold, nope, puked. Then recovered, trying to go green, and it wants to do this retest. This is going to frustrate me to no end, isn't it? It's going to frustrate this trade, this market, this environment is going to be, yeah, look at that. It's already, like, we're just moving so many points. So we just came off 80 points, 80 plus points, and that took 2 minutes. It's just such an unforgiving environment. Such an unforgiving environment. All right, let me get this. Come on, just make it easy. First 3 trades were nothing. All right, a little bit of a breakdown I'm hearing. I'm just watching this to, you could see my soul leaving my eyes. Like, it's just so close to knocking me out. Oh, it's going to be what it's going to be, folks. It's going to be what it's going to be. All right, race, random. All right, we are on multi-lane madness, apparently. All right, let me set up the people who are competing. Representing YouTube, we have JD. Representing Rumble, we have Fox. Firefox, I believe. Then we have Gen X Lee. Then we have Katz, who said he doesn't need the cash, but hey, we'll see if he's still the victor. And then Tire Slayer. We'll just do Tire for now. All right, we did that. Finish. We have that. Good. Bots. Let's get all ready. No. This is a painful one, folks. Your boy's feeling a little bit of pain. How's everything looking? Maybe the marble race is what we need to do. Like maybe that's the thing to save my account. Maybe I need to quickly do it. Tendies and Tunes. Oh, this lower high doesn't make me feel so good. It would have been one thing if it just quickly bounced out of it. If we can get back up on 82 here, this might just be a higher low, and maybe I'm just going to be lucky. But until I see it, I'm just going to assume the base case is your boy's not lucky. I mean, look at that. It doesn't seem that big, and that's the tough thing is even in a day trade, yeah, you have to sometimes let your stuff just breathe, but these ranges are just so sizable that, like I said, the economic impact is massive. I would love for us to just continue this trip higher. Fuck. What are we doing here? It's about to knock me out for break even. So potentially the only smart thing I'm doing right now is not digging myself deeper into this hole. Like if it does keep going, and it almost got me right there. It was very, very close. Technically didn't knock me out yet, but it seems as if it's coming for me right now. So potentially the only smart move I've done today is recognize I'm in a hole and structure the trade in such a way that low chance of me making money, but the trade-off there is it's not going to cost me any money. So I'm giving my chance. I was giving myself a chance to have some skin in the game of if it ripped, it ripped. Cool. But the trade-off there is like with such an aggressive stop movement, the chance of this, dude, I mean, my stop is at 31. It got to 31.25. I was a tick away from that one blowing me out. If this trade works, that will go down as the luckiest thing ever. Look at this. Here, I'm trying to make it big. Right there. It came to 31.25 and my stop was at 31. It was as close as it could have been without actually stopping me out. If the market goes from here, that's just divine. That is divine market God intervention. That's what that is. If we actually take off from here, holy crap. Holy crap. Anyway, as you can tell, there's a high odd chance I get stopped out for break even, as in don't make any money, but also don't lose any money. Hence why the stop's at break even. But there is then the small percentage chance that maybe this is the low and we actually just bounce from here. I'm not feeling the most optimistic about it because ever since 948, 945, 949, I'm seeing these lower highs, lower lows. I am still optimistic of us like going nicely green on the day. It just seems that I cannot get the timing proper in terms of a risk reward perspective to take this trade. So maybe, I don't know. I think I just need a race. I want to take my mind off of it, you know? Let's just get racing, folks. Okay, let me make sure you guys can see this. Okay, you can see what I can see. Let's get this going. Folks, if you've been here before, you know exactly what's going on. We are having a race to the finish line where that is the only rule. The only thing that matters is being the fastest. The winner of this race is not only getting $150 cold hard cash, but eternal bragging rights. This is something that is resume worthy. The winner commonly updates their LinkedIn. It sounds like I just got knocked out, unfortunately, but whatever, break even. You can update your LinkedIn. Like this is the big deal. So please stand, put your hands together for what is about to go down. And I just want to make sure we have a good song right here. We have electronic, we have daddy pow, we have country, we have rock, we have hip hop. Let's play a little Kohrs in here. Let's get a little Kohrs. From Tendies and Tunes popping in the background. All right, ladies and gentlemen, and everything in between, the race is starting in 5, 4, 3, 2, 1, and we're off. And we are off. All right, how are we going? Lee with the early lead. Lee going for the jump. All right, landing in the second to right path. And so is everyone, actually. JD choosing to go all the way to the right. Lee missing that speed up. That might cost him in a little bit. But Gen X Lee is currently leading the race, followed by Cats, followed by Tire Slayer, followed by Firefox, followed by JD McKinney. JD is the only one taking the top path, seemingly getting a little bit caught up as Lee is showing the world what the definition of speed truly is. We are in the first twisty turvy, and he got a commanding lead, and he's holding on to it nicely. He's kind of showing the world what is what and who is who and how to play this particular game. But let's see what's going on. Lee, does he have it in him? Does he have it in him? All right, getting caught up at the first turnstile. Fox coming in like a bat out of hell. But, Tire just got the lead. Tire Slayer using a rare misstep from Gen X Lee to really take control of this race. And now we have these like kind of 8-figure twisty turvies. Now we have Tire Slayer leading the race, and then also Fox is right behind. But let's see. All right, we're at the end of the twisty turvies. We're almost there. Will Tire Slayer be able to capitalize on Lee's misfortune? We are here in 3, 2, 1. Tire Slayer, congratulations. That was a very tactical race. Second place is Firefox. Third place, we are still waiting. Cats, followed by Jen. Whatever happened to Jen Lee? And JD making an early mistake in the race, choosing to go on that top path. Still valiant fight to the end, though. Valiant fight. Folks, please join me. Please join me in a round of applause for Tire Slayer, just representing. He was in second for quite a bit of the race, and then we saw at that one red twisty turvy, the two front runners got a little bit messed up, and Tire Slayer saw his opportunity, and he just dug deep, used his heart, and he just lit it rip. Congratulations, Tire Slayer. That was a very well performed race. Good stuff, man. Good stuff. Obviously, Jen Lee, Cats, and Tire Slayer, I'll be reaching out to you. All three of you guys are getting a Vanquish account, so make sure you sign up with your locals email. Make sure that is your Vanquish email. And then Tire Slayer, I'll be reaching out to you specifically to get you that cold, hard cash that you so rightfully deserve. Congratulations. Congratulations. What a payday Friday. That was a very solid race. What's going on? What the fuck? I don't know what's happening.
Order submitted.
Did something just get announced? Did something just get announced, folks? We got a huge burst of volume right at 11. And I don't know what the fuck I'm doing. Literally, as soon as the race ended, there was just a huge pop. We went from 400 to 575. We went 175 points in about 10 seconds. Like just maybe 30 seconds. Like this range is just so... It's very, very difficult to handle if you don't have the right buffer. And right now, I'm not even close to having the buffer that I need, which is causing me to have to use risk points that normally I wouldn't do. Like nothing about this last 2 weeks of trading has been the risk points that I am personally comfortable with, like whatsoever. And then that whole thing is just being drifted. What the fuck was that? Is there news? Because that was a big pop. That was a large pop. Okay, I have a 5K. So 5K is 250 points. That would bring me the whole... No fucking way, dude. I cannot get on the right side of anything today. Like just no matter what it was. Huge just breakout. We took out the high. It is breathing life into this concept of, are we going to go up to 5,300 today on SPX, which is clearly the trade that I am hell-bent on making work, and I just can't catch a fucking thing. Where's 300? 300's all the way down there. Do I just want to use 300 as my risk? Dude, I can't get shit to work today. This is your boy. I guess I just used all my luck earlier this week. I mean, look at that. What the fuck was that? I mean, that was an actual technical breakout. We broke the high. It looked like we were going. Uncanny, whatever the fuck this market is. Broke the trend line. We pull back. Cool. Something got announced. Someone places a trade. We take out a high. Everything got a little bit of a spike right there. What happened in options? S&P 500, noteworthy spike in options that then is faded a little bit. Price more so faded. Look at the Mag 7 right there. Big spike in like someone did something. What was Fed Williams? Tariffs will boost inflation between 3.5 and 4% this year. So John Williams, the New York Fed president, is speaking right now. And that's the only thing I am seeing. Dude, what? This guy is causing the market to go fucking haywire, and my account is just getting its dick kicked in. This is beyond painful. It's so evident that in environments like this, you could pretty much take technicals and fucking throw them out the window, because it's just so much of, you just have to assume you're 50-50 and then just like ideally have the tightest risk you like can possibly have, and then just pray that you're on the right side. Because this, like literally right now, we're all learning of how like anything at any moment could happen. Anything at any moment can cause the SPY just to rip $4, then to fall $4. This isn't, I mean, I get why people are trying to follow technicals and you're like trend lines and this and that, and it works until it doesn't. This all works until it doesn't. Fuck, dude. I fucking hate this market. I hate this market so goddamn much. I hate it. I hate everything about it. Even this, like all of these things popped green. The 5-minute got green. The 10-minute got green. The 30-minute, it all got green and then quickly got faded. So even some of this momentum stuff, especially in the short term, it's so difficult to use because it can flash green and that might be your signal. And then surprise, surprise, the next time you look at it, you are many hundreds of points off because of just how quickly it's faded. This is just a disgust. We might have another inside day. Not only was yesterday's high and low within the previous day's high and low, thus far, today's high and low is within the previous day's high and low. This is just, I'm getting my ass handed to me. Like these ranges are eating me alive. Like, you can't reasonably trade this shit. You really cannot. Holy fuck, dude. That was a nice break that just got fucking smashed. And then the other times you play these news breakouts, it just keeps going and going and going. Like if you played the breakout from the fake news, the Hassett, like the fake 90-day pause news, that went for 1,000 points or something. And then obviously Trump's real announcement went for even more. So like this idea of like the Monday morning quarterbacking of like, oh yeah, like you should have waited. Well, then you could find, like, it's just so easy to find counter examples for anything in this market right now, I guess is my point. So whenever you find people being like steadfast about like, you should be doing this, you should be doing that, you don't know shit right now. Because in this market, what you should be doing is either not trading it or trading it in a way where you just have like the most minimal risk, because that's the only way to survive. It's the only way to survive. It really is. What a frustrating day to trade. Yeah, I was really hopeful for some sort of like nicer trend day. I didn't even necessarily like, I wanted it to be bullish, but dude, at this point, I'm begging for any trend, any nice trend that we could just get in with like reasonable risk, because like this is what you're seeing is like the definition of whipsaw. So we were bullish, we were bearish, we were bullish, we're now bearish. I don't know. Maybe this is the breakdown and we're legit bearish. Maybe it turns right here and it goes absurdly bullish. Like it just, you don't know. The algos initially picked up on some keywords in Kashkari's comments and were adjusted. Yep, seems like it. Bots went nuts. The bots got it wrong upon readjustment. And sometimes they get it right. Once again, even these bots have a 50-50 shot. So the bots quickly ran it up. They thought something was quality, useful information. And now they decided to obviously fade it. And who knows what they're going to do from here. Bro, that's what I've been saying for weeks now. Minimum risk. I mean, that's literally what everyone has been saying, or everyone who's attempting to not blow out their account. Are you not going to switch to micros? No, I just don't feel like it. I probably should. I'm not saying that that's it's probably the right, like I'm admitting it's probably what I should do. I guess don't want to. I don't want to. I'm trying to be hopeful, and I just assume that even if these are all 50-50 bets, I'm assuming that I don't have such severe poor luck that you could be wrong on that many quarter flips in a row. But it is what it is. It is what it is. I'm holding 508 puts. I mean, whether you're holding puts or calls, you're long or short, no side is in control right now. So with it, like, you just have to know where your risk point is and where you're going to admit you're wrong, because if it's going against you with whatever your trade is, if it's going against you, yes, you have some sort of non-zero chance that it whips back in your favor and you're fine. But you also then have to just be mindful of, like, ask yourself, in what event, what would have to occur for you to be like, oh, no, like, it's trending and it's clearly trending against me. And the answer to that is going to be different on what you're trading, the time frame you're looking at. Obviously, a trend being there or not being there is very different on the 100-tick chart, which is very different from the 15-minute chart. So you got to be using a time frame that is appropriate for you and, like, what time frame you care about and how long you want to be in the trade, or, like, kind of what you're seeing. But in the most general sense, this is a horrible whipsaw day. Like, in a very, very brutal whipsaw day. So I guess just Godspeed. You either have the options of sizing and using the proper derivative product, and I'm saying that to whoever just said, like, maybe you should be using micros instead of minis. Yeah, you're probably right. Instead of trading one of these where you can go 100 points in seconds and either make or lose $2,000, yeah, you could size that down, because the micros are going to be a tenth of the size of minis. So 100 points, instead of being 2K, well, it's only going to be 200. And all of a sudden, that's a lot more manageable. But I'm now in this situation where I've taken so many hits trading the minis that even if I went over to micro, even if I get the trend right, I'm not going to be able to dig myself out of this hole. So I'm at the point where I got to keep trading the same thing and just hope that the buffer I have built up is good enough. And hopefully I can finally catch a fucking winning trade. But this is painful. Your boy is in some pain. The only way that I get saved on this particular day, the only way I get saved is if this choppiness stops and we break to the upside, and most likely I'll need a trend above 5,350. I think that is the only situation that I can get out of this unscathed on the day. And the odds of that happening right now are looking pretty freaking dismal. So I'm not saying, I'm just letting you know what I would need to happen. I would need this breakout where we've gotten rejected 1, 2, 3, 4, like basically 5 separate tests. So I need to break this resistance, which is right above. I need to win the transition zone, win the market going from red to green, win this breakout that we've already been rejected at. And then not only do I need a push up until the next level, which is 50 points away, $5 in the SPY, I probably need more than that. And it's that miracle amount of events that I would need to be okay. And I need all of that to happen without us really dipping below the low that just got put in. So that's where we're at. If you look at the chart, we are technically in a downtrend slightly. That's dependent on your time frame. Uptrends and downtrends are dependent on your time frame. If you look at the monthly chart versus the minute chart, you're going to see very different things. So to say what trend we're in, you have to say a time frame. It doesn't make sense to say a bull trend or a bear trend without a time frame, because what you see in 3-minute chart is very different than what you see in the 30-minute chart. So people like to be very confident just in their own time frame. They're like, I saw this time frame, it's either bullish or bearish, and you don't know what other people might be looking at the daily. If you're looking at the daily chart right now, you're saying consolidation. We have an inside day. We have potentially the second inside day in a row. If you're looking at the 3-minute chart, you're going to say this is like choppy bullshit, slightly favoring the bears. If you're looking at the 15-second chart, you're saying, oh, we're getting a little bit of a bounce. So once again, every YouTuber and their mama recently preaching Orbo. Now no more Orbo in a while. Yeah, I don't know why that happened. I agree. Like seemingly out of nowhere. I mean, if you guys don't know what the Orbo trade is, it's the opening range, either breakout or breakdown. So basically you look at either like the first 10-minute bar of the day, the first 15-minute bar of the day, the first 30-minute bar of the day. And that's the opening range, like the 30-minute opening range, the 15-minute opening range. And then you either take the breakout or the breakdown trade of that range. For whatever reason, that's a well-known strategy. It can be good. It can be bad. Out of the box, just trading it by itself, I don't think you're going to have much success. I think you have to add a couple other filters on top of it to tell you if you should really be taking the trade or not. Anyway, I noticed the same thing, that seemingly out of nowhere, everyone's like, no, I got to take this. Like seemingly overnight in the streamer space became really, really popular. And I have no idea why. It's fine. You're not going to be net profitable trading it as it's just initially explained. You're going to have to add other filters on that on top of the breakout or breakdown tell you if you should actually be taking that trade or not. It's a particular strategy that I studied years ago, did quite a bit of research on. And like I said, it's fine. I'm not against it. I could tell you if you're trading it just for how it is, like it's going to be dangerous. Fuck, dude, we're coming back down. Dude, these goddamn bots, they're going to be the death of me. Yeah, I'm seeing the Mag 7 take a hit. Even the SPY puked and hasn't done anything. So the SPY options flow is just flat. The Mag 7 options flow is a little bit more painful. It puked. Yeah, we're getting this. Dude, I'm looking for anything at this point. I'm looking for anything at this point. Okay, maybe this all went awry when I started trading before that 10 a.m. data drop, where like, yes, there was a chance it went in my favor, but obviously today it broke against me. And then before you know it, I just started kind of firing from the hip. Firing from the hip. What are we doing? We might be breaking down below this box. That puke. I'm just afraid to do anything because the setup here I would say is a bit bearish because you could play it to this level and then maybe you get the puke down to 5,200. But knowing my luck, then we'll just put in that low. This will be a random higher low and then we just bounce and fucking rip. Oh, maybe the best play for me right now is to do nothing. Maybe the absolute best play is to just stop. Just close out this position and just stop. That's always something to consider. That's something to consider. When should I sell my puts? I don't know. I'm not your mom. It's your money. It's your trade. I don't know your trade system. I don't know your risk tolerance. I don't know what you're seeing in the market. I have no idea if you even know really how to trade, or are you just like randomly guessing? At the end of the day, like your trade is your trade. Your trade is your trade. So, yeah, of course, I'm a fan of taking in as much information as you have. But if you're like relying on other people for what you should do in your trading, it's not going to end well. Inverse head and shoulder on the 5. Well, for that, not really. I mean, I guess if you're counting pre-market trading, it would be an inverse head, shoulder, header, head, shoulder, head, shoulder, but you'd want to snap the neckline so the formation of it wouldn't be complete until you actually break above 527. Until then, the structure is not really there. On the flip side, so you could say that that's bullish, shoulder, head, shoulder. Someone else could say, no, lower highs, lower lows, like we're trending down, that's bearish. And that's what I don't get about people who are only trading off of technicals. like exclusively technicals, like as if that's dictating it, at any given point in time, you could find a technical structure that suggests the opposite. You really could. And I find that a lot of people who do it, it ends up just becoming Monday morning quarterbacking. And they look at how it played out, and then they look at the setup beforehand, and they look for something to justify why it went that way, when that's not trading. Because in trading, you don't know where it's about to go. So you see it all. Like, I mean, I've seen all the technical analysis videos. You've seen all the technical analysis videos. All these people do it's cherry picking examples to explain what point they're trying to prove for whatever their video, this, that, the other thing. So they go through, they see the play out, and they're like, okay, cool. Like, they contort their argument to like literally how it went, which is just, it's not trading. I mean, you might be able to just illustrate something if you're just trying to literally basically explain what a technical structure is, but to use that for trading knowledge, well, you kind of can't. And you really kind of can't. Jesus. Hang on. What do I want to do here? How do I want to do this? Oops. Where did my screen go? Where did my screen go? Sorry about that. I didn't realize my screen left. I'm wondering if I should just cut this and like end my misery. That's kind of my go-to thought right now. Do I want to cut and end my misery? Cut and end my misery. It kind of would feel nice to be put out of my misery. I'm not going to lie at this moment. It would be nice. Tesla's really getting hit for whatever reason. Nvidia, not so much. Kind of a strange day. A very large range, choppy, shitty day. 5 minute, 10 minute, and 30 minute are bearish. 5 minute, 10 minute, 30 minute are bearish. 4 hours choppy sideways. 4 hours choppy sideways. So the largest time frame I'm paying attention to, at least on this setup, is neutral, while the shorter time frames, the 5, 10, and 30, are now bearish, but literally at 11, as in 20 minutes ago, you could have argued that they were bullish. So 5 was above, the 10 was above, the 30 minute was above, which is me just trying to illustrate to you that it can change very quickly because of the ranges that we're going. So literally as of 11, you could say, nope, we're on top, we're on top, we're on top. And then 5 minutes later, that was all faded. So it is very illustrative of how choppy it is. Another way to know that it's choppy is yesterday, the high and the low were within the previous day's high and low, defined as an inside bar. Today, the high and the low are within yesterday's high and low, another inside bar. Very rare to have two inside bars back to back, but that's currently the situation we're at. Obviously, that would change if we break yesterday's high or low. I think that goes without saying, but as of right now, it doesn't look like we're doing that. As I said before, a random ass bounce. We had it, whoever's calling out the shoulder, head, shoulder, maybe it exists. Other people might just be seeing lower highs, lower lows, a channel down. Like, you can be seeing so much like this. It's just such a news driven environment. I uniquely dislike this because, like, if you think about it, what edge do we really have right now? It's not the person who's best at reading technical structures. It's not the person best at reading the option structure. It's not riding these momentum, because at any moment, we're just getting random updates, random announcements. Like, when you're in such a high volatility, news driven environment, it's kind of the luck of the play that you have on right now. Is it going to get a benefit from a random announcement, or is it going to get completely murked? You don't know. You don't know. So there's generally quite a bit of randomness in the market. And I would argue right now there's even more randomness than normal in the market. And on top of that, we're at high volatility. So, Jesus. Bots have the edge. I don't even think they have the edge, because you can see these fake outs. All these bots that bought it up thinking that that was a good announcement got murked. So even to say the bots have the edge, I think no one has it. I think the people with the edge right now are the people who literally just have like inside information of like, hey, I know what's going to be said. I know what's not going to be said. I know when things are going to get announced. And I think that that's happening because before some of these announcements where we see big pops or big drops, we are seeing clusters of large amounts of options trades outside of normality. So someone out there is getting some good alpha. Someone out there is getting some good edge. But I think everyone's right now is unless you have that like political insider knowledge of like what's about to be, unless you're a person who knows what the news is about to be, like before it's announced, I don't think anyone has the edge. I think the bots are on the side and they're praying for the best. I think traders, I think options traders, technical traders, I think Trump is the edge. Honestly, that's how it feels. But I wish you the best of luck. Obviously, my account is in a legitimate amount of pain. I'm trying to save it, but I'm just getting chopped up. Like you could see from the chart, bullish, bearish, bullish, bearish, bullish, bearish. Like you could even see from price action, this is choppy. Unfortunately, it's happening with very large ranges. I mean, the Qs went from 443 to 450, down to 441, up to 449, down to 442, back up to 444. And that's just as of now. We're not even at lunch yet. So when you see that type of movement, that type of craziness, that it's just a lot, not only is it chop, but it's a lot of painful chop. And obviously I'm just like stepping in it and I'm getting messed up. And even at any given moment, if you argue it's a 50-50 shot, I've been coming up the loser on a lot of these different coin flips, So maybe a trend can establish itself at some point today and I could take advantage of it. But it doesn't feel like that. It definitely doesn't feel like that. Fuck me, dude. Is this about to go? I don't know. I just closed mine out because I don't think I'm on the right side of luck today. In fact, I don't think I have any luck today. I'm just going to low 34, 33. I'm just marking out the lows and a potential reversal, and we're going to see what's going on. But if this doesn't bounce here at 5,225, I'd then be looking for a push to not only a low that we saw around 345 yesterday, but also just a key open interest level at 5,200. So we're going to see how this one's going, folks. That's what I have for you. A little bit later on today, we are going to be posting a extra special video on the Evergreen channel. If you're on Rumble, it's on the normal channel, so be on the lookout for that. Congratulations to the winner of the race, Tyre. Congratulations to the winner of all those the Vanquish prop accounts, and congratulations to everyone who competed. But another successful Payday Friday. Not necessarily a successful day trading, but hey, the game's not over. We still have 4.5 hours, so maybe Lady Luck will bless me. But all I could tell you is Lady Luck is definitely not blessing me today. Not today. So we'll be posting one extra video today. We're taking tomorrow off, Saturday. Things should be quiet. And then we'll be kind of doing an update video on Sunday, kind of more of a prep for everything in the upcoming week. So be on the lookout for that on Sunday. That's what I have for you right now. Please be careful in this environment. This environment is by definition just absolutely bonkers. It's absolutely absurd. So just be careful. Be careful. I'm going to go shout out to Vanquish. And shout out to the Discord if you're about to be there. I'm going to spend some time with you guys. And other than that, I wish you guys luck. So be careful in this whipsaw. Protect yourself. And remember, it's okay to not trade. That's what I have for you now. Peace. Enjoy your weekend.